fuck?
Bang, bang.
Whoa. Welcome back to the Rollup TV.
We have massive TGEs upcoming, don't we?
Yeah, we do. Anoma, Monad, Plasma, Fogo.
Yep, I'm excited.
We had Syndicate recently. We had...
That was $1 billion launch.
We had Aster. Dude, my Aster tweet is going crazy viral. 250K views. Guys, if you haven't seen that, look, it's on my Twitter as of like recent. Basically just CZ responding to Hyperliquid with Aster. Yeah, pretty wild pump. That thing just pumped from 50 cents to $1. It's over at $8 billion market cap now. So yeah, that's the response that CZ had to Hyperliquid. I don't know, man. I'm bullish hype. I'm not bullish any of the copycats, but
remember the whole mental gymnastics we went through trying to pretend like, okay, if we were CZ or if we were Brian,
yes,
we see CZ mostly because they have the perps, and we see Hyperliquid success. What would we do? I saw you just quote tweet that recently.
Yeah,
you had Jeremy on. We had Jeremy came on the show. How is Brian reacting to Jeremy going deeper in the Hyperliquid ecosystem?
I mean, yeah, that's what was my last question my last take to Jeremy was like, he was talking about how HIP3 is so bullish for these, being able to create markets anywhere and being able to do anything with these markets. You can deploy them into any front end. And I joked, I was like, maybe we should get Brian on the phone and get him to stop building out perps and just integrate Hyperliquid. And he kind of laughed. He kind of threw it around. He was kind of like, yeah, okay, man, sure thing. It was funny. I don't know. It was funny for sure. So
seems to be the way that the world is going.
We've got a banger lineup today, Rob. We've got
the
Pantera partners, 𝘗𝘂𝘕, and we have Paul coming on to talk about the state of crypto VC. Paul wrote a really great post. That's going to be a longer segment talking about their Solana DATs. That's going to be the first one. Then we have, and shout out to them for raising 500 million. That's a big one. Then we got Frank Chaparro, head of content at GSR, formerly The Block, big OG journalist in crypto. We got Benji from Pump Science, Molecule, more DeSci stuff following Bio's big raise from Arthur's fund. And then we got, of course, the AI Supercycle episode 1 with none other than the half humanoid, half agentic being Near, CEO, co-founder, former creator of Transformers, Google, Ilya.
Inventor. We're having inventors on the show now, Andy. Unfortunately, I'm going to have to step out while you chat with Paul and the Pantera guys. But I am stoked to be back and pick it up with Frank. Is going to be really interesting. He is very investigative, has a lot of news coverage and a lot of interesting takes. Very unique coverage on the ecosystem. So I'm very curious and interested to talk to him. And then the DeSci stuff, I mean, it kind of flops back and forth. I think there's a lot of fugazi kind of nonsense that happens in that space. It's just another fundraising tool. But ultimately, after our conversation with Paul on the DeSci front yesterday, I kind of have this reinvigorated sense of conviction in that sector because they're doing things that are only possible using blockchain technology.
We're going to go live with the Pantera folks now. We're going to bring them up and get that thing rolling, and then we're going to roll into the rest of the show. Welcome back. Thursday, September 18th. Big day yesterday with the Fed. Guys, sit back, relax, and enjoy this first segment with the Pantera folks, and we will see you guys there. We're going to bring them up shortly and get them firing. So looking forward to this one. There's a lot of talk around their Solana DAT. They raised 500 million for it. And yeah, it was a big moment for them. So I'm ready. We're going to bring them up and get them firing, get the boys going. So looking forward to it. And yeah, let's go. Let's get them up. I think I got them ready in the back. I mean, these guys raised. Okay, perfect. Sorry about that, guys. All right, last run through here. Okay. All righty. And it's showtime. Here we go. All right. Welcome back to Rollup TV, guys. We have two amazing investors and new friends of the show today. We've got Paul from Pantera as well as 𝘗𝘳𝘦𝗡. Welcome to the show, guys. Welcome to the Rollup TV.
Thanks for having us.
Hey, man. Yeah.
Great art there, 𝘗𝘳𝘦. That looks like an impressionist piece.
Yeah, no, it's hammer and sickle. I think it's actually Andy Warhol.
Okay. A little bit of taste. Well, Paul's calling in from Rio. You've got some cool art. We've got a big Solana DAT on the table. We had 𝘗𝘪𝘴𝘬 on the show earlier this week talking about Hyperliquid. There's a lot going on, guys. First time on the show, Paul, would love to know a bit about your background. You're a partner at Pantera, but you've been involved with a lot of companies. And then same to you, 𝘗𝘳𝘦. And then we'll dive into some of the VC things, some of the DATs, and more. And welcome, guys, to the show.
Awesome. No, thank you for having us, Andy. Yeah, I'm a managing partner here at Pantera. I've been at Pantera now for 11 years. Actually, I mentioned that earlier at the Stellar conference that I'm at in Rio, and there were just like 11 years in crypto. That's like insane. I mean, the first investment that was happening right as I joined Pantera was the Circle investment in their Series B. So
wow.
Glad to see companies going from early stage all the way to IPO. But yeah, no, I manage the venture team here at Pantera, and my background has been now primarily in venture capital. I'm getting to my 16th year in venture capital. Before that, I was focused on investing into mobile infrastructure, mobile applications. And then before that, I started off my career as an economic consultant. And then I was also doing business development and growth for some early stage startups in the daily deal space. So I sort of bring that analytical background with startup background, and then just been sort of crypto native in terms of my investing experience for the last 11 years. So 265 companies, 22 unicorns. I've sourced and led 17 of them. So I can talk about the different cycles and all things around it.
Guys, a deal maker. 𝘗𝘳𝘦, welcome to the show.
Yeah, thanks, Andy. Excited to be here. So I'm 𝘗𝘗𝘦. I'm a general partner here at Pantera. I joined a few years ago, really brought in by Paul, and so huge kudos to him for us connecting and joined to help complement everything that we're doing on the early stage side, which is led by Paul, and I manage everything that's more public markets or liquid facing. Most of my career has been in traditional finance, more classically TradFi background before entering crypto. I did banking, private equity, and then was at a hedge fund doing long-short equities for a long time. And my whole ethos and reason for being in crypto is to try to bring a lot of that classic like financial rigor and fundamental value lens to crypto, which I think 3 years ago when I was starting that, I feel like I was shouting from the rooftops and everyone was like, what are you talking about? But now more and more, like people are even talking about revenue now for the first
time. Return to fundamentals,
podcast.
Baby. Yes.
Yeah. And so I'm just like, finally, this wave that I've been trying to push forward is actually happening. So it's been exciting to see.
Yeah. It has been, and the market has certainly started structurally changing towards that, at least in the last quarter or so, if not like 2 quarters. So excited to dive into that. First up, we've got Paul's 60-page report, maybe 50, 60 pages. Guy just put 18 years down into a PDF and said, you know what, we're going to ship this. So a lot going on in that report, Paul, on the state of crypto VC, what's happening. Some of the interesting stats there: $16 billion raised this year, focusing on different pre-seed, seed, Series A. You kind of laid out the thesis for each with a focus on Series A as well. Also a record number of M&As and IPOs. So potentially VCs can be thinking differently about exit strategies now, as well as just bifurcation and performance of different crypto assets due to kind of what 𝘗𝘳𝘦 is saying, right? With the actual kind of new fundamental focus. So Paul, maybe just bird's eye view. What is the state of crypto venture as you put out this report? Talk to us about some of the actual funding, some of the types of projects, what trends you're seeing from investors, what they want to invest in, kind of open-ended here, and then we can kind of dive in.
Yeah, and I know 𝘗𝘳𝘦 could definitely add a lot of color to this too. Yeah, it just kind of felt like there was a lot of stuff going on in crypto VC, and my thinking around publishing the blog 𝘭𝘭𝘵 was really to highlight some of the trends out there and really then dive into what I'm seeing as a VC, some similarities to traditional VC, some differences between doing VC in crypto versus traditional VC, and what we're seeing this cycle is that it is much different than previous cycles. I've been doing it since 2014. So, back then, I mean, the cast of characters were much different. You go to a conference and you see a bunch of libertarians and cowboys, and definitely a lot of technologists, but no one that really sort of had the business background to be able to take things to market. Then you started to see guys like Jeremy Allaire out there, and guys that have exited companies in the past, and with his background, taking companies public and been successful in the internet era was phenomenal. And so, they started coming into the space, and then the 2017 bubble was really just like, how do we sort of start using tokens for capital formation? But a lot of retail, still not much regulatory clarity. And then, of course, like the cycle beforehand, we started to actually see DeFi come to the forefront. But at the end of the day, I mean, there's this cloud around regulations that really made it tough for companies to even operate, if not like go out there and really feel comfortable around getting product market fit. And then, this cycle, I mean, to see the regulations come about has really brought on partnerships and buy-in from institutions. Stripe launching L1, Robinhood getting into the fold through their partnership on launching tokenized equities, and then we start seeing like all these banks and payment companies starting to get into the fold. It's really just bringing a lot of validation to the space. And then, of course, like we start seeing the IPOs coming to market. I mean, up until now, everyone's like, well, there's only been one IPO. Now we've seen like 3 or 4 happen, and they're all Pantera portfolio companies. So we're really starting to see like this graduation where, we can see exits, we can see public market interest in a lot of these companies, especially around the intersection of stablecoins and in payments. The Genius Act obviously helps with that. And then we're seeing, IPOs around custody and trading. I mean, just like the picks and shovels of the entire ecosystem. And, with these IPOs, we're going to see a ton more M&A, right? I mean, people are going to really put this capital to work. And so most of the M&As have been through larger crypto companies. And a lot of it through Coinbase. Now we're going to see a lot more diversification of companies that are going to make acquisitions, all these guys that are going public, in addition to, of course, like these larger companies, these payment companies. So the M&A market is just really starting, and I think it's going to get much higher. I also think the funding market has started to pick up a little bit, but it's nowhere near 16 billion. It's nowhere near where it's going to be. I know a lot of companies that are waiting until later on this year to see more IPOs, to see more regulatory clarity so they can go out there and launch their token. And if they're going to launch their token, they're going to want to do a pre-TGE round. So we're going to start seeing some bigger and bigger growth stage rounds. We're going to see more IPOs, more growth stage rounds there, and actually more talent coming in from these traditional tech companies, because we're seeing a huge intersection of payments, AI, deep, et cetera. And so I do think that we're going to see probably starting off with a lot more growth stage deals as people start hitting the market on the IPO and TGE side of things. But then right afterwards, we're going to see a ton more funding around the early stage side of things.
Yeah, I mean, it feels like this year has been a bit slower. I mean, if you just look at 2021, 2022 on the venture side from the funding perspective, it's just been a pretty linear, trend down. And I'm not sure how we break that, what kind of happens there, because that 2020 to 22 period was obviously zero interest rates, maximum crypto infrastructure investing. But perhaps what you're saying, which is now these larger companies either looking to IPO or looking to do a token launch, et cetera. I have a couple that come to mind that I've heard of through the grapevine, of companies that you wouldn't think would be launching a token, or like look seriously considering launching a token. Like, well, this is gonna outpace anything else that we've seen in a long time in the crypto market if these guys are actually launching a token.
It's insane. I mean, well, look, I mean, there's this thing called FTX, BlockFi, Terra Luna. I mean, we got hit with some really gnarly stuff that would bring most industries down, but we're resilient. And, now we have regulations really sort of providing a lot more sort of comfort that, hopefully these things don't happen. And then going forward, I mean, enough regulatory clarity and comfort where we're starting to see companies actually established companies in crypto thinking about just removing equity altogether and putting all of the value into the token, because they believe that that's going to drive sort of focus and sort of a great way to sort of bring value in a decentralized way. And then of course we're starting to see established companies, like companies maybe not like I mean, obviously we're seeing Stripe on one end, but we're starting to see guys below Stripe starting to think about launching a token and feeding that back into their business model, which is awesome. It'd be a huge risk in the past, and now it's become a lot less of a risk and more of a weapon.
Yeah. And so, 𝘗𝘓𝘗, when you're kind of extrapolating this venture landscape into some of the more liquid kind of current happenings in the market, I think part of Paul's report mentioned that, Q4 25 into Q1 26 is looking fundamentally stronger than past cycles. And just generally thinking about how obviously these treasury companies have came about. I'm curious what you think from the fundamentals perspective on this cycle or this kind of part of the market. Kind of how are you seeing what is happening in the VC side of things, or let's just say the kind of cleansing of the funding of a lot of different projects for the sake of funding? I would say, at least with the higher interest rates, more harder to get access to capital. Some of these venture funds are having trouble actually raising their next fund. This is leading to like a bit more of a constricted environment. Now, obviously, Paul has said that this is likely to change as a result of some of these larger companies coming on, doing these pre-token rounds. But we've seen this now materialize. This kind of like the downwind of this phenomenon has materialized in the liquid market with this kind of bifurcation. How are you seeing the fundamentals of the current quarter into the next few, and how does that kind of relate to the downwind of the constriction of the VC investing in the space?
It's a great question. When I think about this, I do feel really fortunate to be at Pantera, where clearly Paul's been doing this forever in venture. And so we have this incredible lens into exactly what's going on in the venture landscape. And then on the public side, that's what myself and we have a bunch of dedicated analysts and a team really focused on liquids. And it's almost crazy to me sometimes when I think about how any venture fund could possibly operate without a real lens on the public markets. And conversely, how could you possibly be the best public markets investor you are if you don't really know what's going on in the early stage either? And so I feel like there's so much sharing of information and synergies here that we get this really broad view. All that is to say that, clearly both markets really jive and jive with each other and impact how each other is doing, whether it's on the private or the public side. And I would say from a 30,000 foot view, it's like things could not be possibly better for the crypto landscape right now, right? Like you look back over the last couple of years, I always like giving some of the historical context. It's like, 2021 was this crazy time of so much awesome, speculative excess and, a lot of things that were going well. DeFi was amazing. And then 2022 was like this bust of, after that speculative excess, there's always this bursting of a bubble. And 2023 then was this time of all these, all those problems coming to root, whether that's us digesting the wounds from FTX, users feeling like they were disillusioned, they were hurt during the boom, and then capital really leaving the space because they felt like they lost a lot of money. And we started to see that change, right, in 2024. And this year is really about all those, what were once headwinds becoming tailwinds across each of those things, whether that's users starting to come back now and interact with DeFi and other crypto applications in a big way, whether that's, capital allocators now feeling like, wow, they really have to be involved in a way that they weren't before. Because our government is involved and because regulations become more clear. And then specifically, like, man, on the regulatory front, it's like all systems go. The last few years has been incredibly tough for all markets, not just venture, not just private and public, but like, how could you possibly be a team and want to talk about any good news if the second you talk about something that's going well, like you're afraid you're going to get sued, right? And so like, and so we're just seeing a total release of that now, and how that's playing out in the public markets is very clearly this year has all about been a story of public markets and public equities investors really wanting to allocate to digital assets, right? You saw that in performance of Coinbase and Robinhood just taking off this year. You see that in the IPOs this year that are crypto related, many of which are our own investments like Circle and Figure. It's doing extremely strong. And then the emergence of these digital asset treasuries has just been also another indicator of just how much equity investors, public markets equity investors, feel like they need to get involved. And all that bodes really well for tokens. And like if tokens do well, then that should feed the early stage market as well, because then you have more reason to invest in private deals if you know that there's a reasonable exit.
So one thing that was being said, Paul, Cosmo, in the earlier stages of the DAT kind of, mania was, all of the speculation in the market in crypto has now moved to public markets. You're never going to get an alt season. Coins aren't going to do well because all that speculative capital and energy is in the public market. How do you feel about that today? Has that spilled over into the crypto kind of core market, or is that still very much happening in the public market?
Well, so I think what's so special and great about these digital asset treasuries, and we did the first, like we were really the guys that started this, and I feel very humbled to like be able to say that, but also really excited that we got to see everything, right? Because we were there at day one from starting the first one, which is DeFi Dev Corp in late March, early April, and then really anchoring most of the main ones coming along, like BitMine with Tom Lee, who I talk to every week, and then us launching now our own with Helios HSDT, our Solana DAT. And so we've really been able to see how this evolved along the way. And I could not have possibly imagined when I did that first deal that we'd be sitting here at $10 billion of capital raised later and like tens of billions of dollars of value created later, like how huge this has become. But one of the things that I didn't foresee, which is your question, is that so much of the participation is actually not crypto natives, right? It's incremental new capital coming to the space. It's guys like Citadel or Brevin Howard or, and real long short funds like Steadfast coming in and saying like, we are public equities market investors, but now we're going to start allocating to crypto. Like those guys were never going to touch tokens in their whole life, right? But they're willing to do it in a public equity wrapper. And so we're bringing in like literally $10 billion of incremental new capital buyers that were not crypto natives into crypto. And that's what's been so powerful, is that has all of it. DATs have done such an incredible job of broadening access and broadening distribution to a whole new buyer base. And that's really why it's been, I don't think it's been cannibalistic. It's been very incremental and additive.
Yeah. Yeah. And I mean, what's kind of ironic here is I've been in the space for 2017, saw that big kind of like how the cycle works then, and then saw how the cycle worked again in 2021. And now rather than actually seeing it play out from a, Bitcoin goes first, then ETH, then the rest of the market, it's been that, but it's not been because like, Kobe is like saving the lows at 3K in the bear market with his like 100 Bitcoin buys. It's like, no, it's like large players came in, did the treasury companies with ETH or with Bitcoin first, then ETH, now Solana and other coin. And it's just been a very funny way to think about how all that's happened this time around so far is that the institutions have came on and just played by the same rules that the crypto markets have been abiding by for the last 8 years. Yeah. Paul,
I think that's what's so great is that and I thought about this, Paul is like the guy when it comes to like being crypto native and knowing everything. I almost feel like it's like such a newbie when I compare my experience to Paul's, but like when I came in, like I'm really a TradFi tech investor, right? I'm not going to lie and say I'm like, this massive crypto bull that I've been my whole life, because it's not true. But when I came in to crypto, it was because I saw so clearly the writing on the wall that if crypto is ever going to grow up as an industry, if it's ever going to go from, at the time, 2 trillion or today, 3-4 trillion of market cap to 10 trillion plus of market cap over time, the only incremental capital coming in has to be new capital. It has to be not retail capital. And it's like TradFi institutions, right? And when you think about what they're doing, like that's all, they are going to be more steady hands. They're going to, like the cycles are going to elongate and be less crazy one way in both directions, right? Less crazy highs, less crazy lows, but more serious capital, more fundamentally oriented capital, and like incremental. And therefore, like the way that these things trade is just going to change very drastically as all this very new category of investors comes in.
Yeah. No, I think it's huge for the market. And what may happen would be that, we thought the ETFs were going to be.
Yes, we did.
capital coming in. Now we're going to see more ETFs, and we're going to see more DATs. It seems like most of the capital is coming into Bitcoin, ETH, and Sol, but that's just going to fuel more entrants coming into the space, getting acclimated with learning about, you know, cryptocurrencies and the use cases behind it. And then I think it's going to flow back to retail and back to institutions for the longer tail eventually, whether it's these TGs that happen, or you know, we're starting to see more long tail DATs come to market, and you know, it takes some time for them to really kind of hit their stride in terms of, you know, fundamentals and whatnot. But you know, I do think that this is going to open the door for more capital on retail and institutions come in for the longer tail. That's my thesis, at least.
Yeah. I mean, yeah, I think so as well. I mean, usually like the tail end is usually the stuff that institutions wouldn't really want to touch anyhow. But it's what gets a lot of the retail excited on the long tail. Paul, last thing for you on the VC side of things, because we're bearing the lead here on the Solana DAT that everyone wants to hear about. Why are you guys concentrating on Series A bets? I'll give you just a bit of context. We've probably done like 50 or 60 investments. And so I'm asking this from a junior investor to a senior investor. And we have done a lot of like seed, pre-seed stuff, but we did like quite a bit of Series A as well in like late 23, early 24 of like quality infra that felt like it was de-risked. It felt like at 100 to 150, or, you know, even like anywhere up to 200, which probably looking back was way too expensive for our check size, which is, you know, typically between like, I don't know, 10 and 50 K. But we felt like it was just like good quality brands that had a good track record and didn't feel like as much as a gamble. Like we felt like, all right, we'll probably be able to get a decent return on this, but maybe these aren't going to be our 100Xers. But at the same time, it felt like a good, safer bet. But I'm curious, when you're looking at the differences between why seed is not as appealing, or why following on in Series A, or why the current market dynamic is ripe for actually doing more of these later stage type of deals, even though they're still early. What is the thinking? Is it a macro thing? Is it a micro thing? Is it a situational market thing? Why is this the concentration for Pantera?
Yeah, I'll help to shed some light on it. I mean, I think it's definitely a combination. I think for any investor, you sort of have to think about what is your fund size and what sort of returns are you looking to generate, or you're promising to your investors. I think for us, like, we have a fairly large fund size, and so we have a lot of flexibility. And in terms of the other factor that I think about too is market dynamic. And so let's start with early stage tokens. I mean, if you're able to get in early on an early stage token, for the most part, at least the trend has been that you're not going to get diluted in the next round. You're just buying a slice of the token cap table. So it's pretty lucrative to get in really early and be able to then double, triple down later on. And so for early stage tokens, even being a large fund, it's actually great to get in on the seed stage side, as long as you feel like you know, this is a team to bet on, and it's non-competitive and things like that, if that's your sort of MO. But on the but the downside is that, like, it is a lot more competitive on the seed stage side in general. And so thus, like, if you're able to wait for the Series A and you have the capital to do so, Series A is a great time to be investing for crypto, because there's not that many funds out there. I could probably name like maybe 5 to 10 versus like the number of entities that'll go into like a seed stage round is probably over 100, right? And so for us, we definitely feel like Series A for early stage token is a good bet. But then especially for equity, there's less entities that want to go into equity because the liquidity is not as immediate as tokens, and you have to be a lot more hands-on and that sort of thing. So definitely on the equity side, we focus more on Series A's. We take the board seats. We know we have to be a lot more hands-on. A lot of these companies are in it for the long term. A lot of them might need to get licenses, focus on enterprise and institutions. And so, you know, that's really where the big focus on Series A's is on the equity side.
Yeah. So you guys have kind of become like this M&A, IPO, treasury company, VC. Like you guys are almost like a crypto asset manager, like full on. Like, it's not just like a VC anymore. It's very much become a multifaceted operation over the last 5 years.
Yeah, I mean, look, the way I think about that is that the core of what we do is really early stage venture, right? Like that is the heritage of the firm, and that's like that drives a lot of what we do. But like I was mentioning earlier, I think it's actually like intellectually dishonest and impossible to be a good early stage investor if you don't actually have the viewpoint of you. Like a venture investor, you have to sell your investments eventually. Like, how can you possibly be a good venture investor if you don't actually know how you're going to sell them into public markets, right? And how public markets interpret your investments. And similarly, like you can't be the best public markets investor you can be without having a sense of really what's the cutting edge and what's around the corner. I think just very naturally, that means that we've evolved to realize we just want to deliver the best possible returns and make the best possible investments for our investors. And the best way to do that is having this broader view. And I think And I think that's made us better, private markets investors, better public market investors. And it's really allowed us to create new categories and do things in a way that other funds just aren't set up to do, right? Like this DAT stuff, it's like, again, going back to early March or late March, early April, when we did DeFi Dev Corp, it was like no one else was really giving them the time of day because they were looking at venture, they were looking for venture funding, but people were like, it's not really venture, it's sort of like a public equity. Like this is like a MicroStrategy thing. No one in crypto really understands that other than Michael Saylor. And so it really took like this very rigorous TradFi analysis to get comfortable with that. But then on the flip side, it also took a venture style mindset of like, we want to try to create a new category and we want to try to start a new company. And so you really need to marry both. Otherwise this wouldn't have even started. And so I think we're just really fortunate to be uniquely positioned in a way that we have such great expertise across multiple facets of the market that allows us to do special things that other people just don't understand. And we're again, it's great that when we do things that they work, of course, and if they work, then other people fast follow, and that's what's happened with DATs.
It definitely is.
Yeah, I'll add on to that. I mean, we are trying to be the leading investment firm, a ideal partner for any institutional investor or even sort of like high net worth individual. And so this whole space started off with VC, then it turned into hedge funds because things got, tokens and things got liquid and things are, the public market started to evolve. And so at the end of the day, I mean, that's why we launched a venture fund that includes both privates and publics, because like, look, I mean, there's going to be so many different ways outside of just even like investing, providing liquidity, all this kind of stuff that's like very unique to our space. So just invest into our venture fund and get access to all of our best strategies. You just make it really simple because we don't know what's going to come up next. Maybe there's another strategy that comes up and we're just going to fit it into the same thing.
Yeah. All right, guys. Helios DAT, $500 million. Mert is not happy with you. If Mert is watching this, I'm going to clip this. What is your word that you have to say to Mert about the name? Let's start here, guys. Come on.
No, I'm so grateful. Like, look, we thought it was a fun coincidence, right? Obviously, we don't choose the name of the company. We're trying to find a public company that is willing to do the dance, and we found a company called Helios. And I was like, wait, we like Helios. We love Mert, and we of course reached out to him early on to say, hey, this is happening, just FYI. And he's a great guy. So in good nature, he's totally fine with it. I think our goal eventually is to, we're definitely open to rebranding and renaming. We don't want the confusion, but for today, the company that we've done the dance with the Helios, and we're grateful that Mert's been really chill and cool about it.
I'm just messing with you guys. Cool. All right. So $500 million sold treasury. Why now? Why Solana?
Oh, totally, man. I mean, as I think about, I think it's two reasons. One is from a DAT perspective. Over time, we really helped kickstart this trend. And over time, we've just been so involved in helping a lot of teams like get involved and like start their own thing, whether it's any of the bankers or any of the lawyers or sponsors. Generally, my team is like, we're one of the first calls, if not the first call for anyone considering doing a DAT. And so we've been pretty fortunate to be involved all along the way. We've invested now over $500 million in DATs. We've done over 20 deals. We've been in helped anchor many of the most important deals like 𝘵𝘬𝘦𝘐𝘠𝗏 with Tom Lee, Cantor Equity Partners or 21 with Jack Mallers. And so we just feel like we've gotten to a point where, wow, we built all this expertise and like we know so much about the very particular nuances of what makes things work and what makes things not work. Like, why don't we like try to do one and really lean in with all that expertise and energy to try to do something great? And then at the same time, Solana is our biggest position at the firm. You know, it's something that we care deeply about. The first DAT that we did, the first US DAT outside of MicroStrategy was a Solana DAT. And so like, actually the original idea was a Solana DAT and it was DeFi Dev Corp. And so we're sort of coming full circle that like, man, after this 5 months of learning, and after seeing the massive success that Tom Lee had with ETH, man, it felt like it was really our responsibility to come to market with what we think is the best vehicle for Solana accumulation specifically, and to do that in service of Solana, but also do that in service of, you know, what we believe is a DAT could really be. And so that's why we're coming to market. Is like we feel this burden of being fortunate to be in this position and also responsible for trying to make great things happen on behalf of Solana and on behalf of the DAT space.
Yeah, and this is why like I love working with Cosmo. I mean, like, as they look at Solana from the public side, like we've been involved with Solana since, you know, the seed round, looking at it, you know, understanding Tolly and what his vision is, and along the way we've been able to sort of invest into projects building on top of Solana. So we've been able to see them marry both their technical expertise to their commercial go-to-market strategy. And so we really started to see a lot of momentum around gaming, DeFi, and then now sort of, you know, obviously there's a lot of stablecoin stuff on Ethereum, but we're starting to see a lot of great partnerships like Visa. We're starting to see a lot of traction around payments for Solana. And obviously they've been a leader around DePIN and things like that. So, you know, the developer adoption and the quality of developers and obviously the transaction volume has been very, very promising. So from the venture side of things, like we're pretty excited.
Yeah, it's beautiful. I mean, it's been on ever since Kyle announced his DAT, it's been on a run. I think he TWAP'd the full 1.6 billion into the chart just in like a matter of 72 hours. So we saw that. Today we obviously have, well, this will go out tomorrow. So FOMC has happened. We'll see kind of how that shakes things up. But I think generally Pump is bringing Solana a whole nother leg here of attention and of mind share with their streaming product, as well as just like the revenue kind of stuff that we were talking about. Cosmo, by the way, I am the creator of the revenue meta, the silly phrase that goes on
That's
Twitter.
Great.
That was my poll back in the day. And so when you guys are thinking about the Solana DAT specifically, and I think with the other DATs that you've done, I saw Kyle Samani go on either like Mert or Thread Guy talking about how they plan to get, maybe it was even TPN, they plan to get 15% or something in Solana DeFi potentially. How do you see the actual usage of the Solana, which you've accumulated or are planning to accumulate, being used outside of just holding it in a, you know, secure custodial environment? Do you plan to stake it to get yield? Do you plan to use it in DeFi? You know, is this going to be what provides Solana DeFi another leg up?
Oh, totally. I mean, I think one of the most exciting things about DATs is that they're almost like a third leg of the stool for any protocol. You know, most protocols have a labs entity, they have a foundation, but like for a variety of reasons, the labs and the foundation, they can't do certain things or they can't invest in a certain way. And so, but having a third, and so the DAT fills a really nice third leg of the stool where we can be aggressive about talking about Solana, and we can be aggressive about talking about the investment merits of Solana and investing in everything across Solana. And so that's been, I think that's just so important. And so we do feel like it's our responsibility in starting on Solana DAT, Helios, HSDT, like it will be a huge participant in making sure, one, that we are evangelizing all the reasons why we think Solana is such a great token and such a great investment for mainstream. And then two, how we can deploy Solana in a very effective way to maximize yield and maximize shareholder value for our shareholders, because that's ultimately the goal, right? And then in doing so, we're really helping drive that flywheel of Solana. And like by using Solana more, by deploying DeFi more, it just proves out that it can be used in a productive way, and it hopefully attracts more people.
Yeah. Hey Ram, what's up, man? You can stay and just stay quiet. This is going to be a fun little ending here. I appreciate you being on time. We're all good, Marcel. Just back to backs here, guys. Cool. Let me just get you back set up, and then Paul, I'm gonna bring it back to you. Same question. And yeah, Paul, anything to add there with regards to your thoughts on how you see either this Helios stat from Pantera or others contributing to their respective DeFi ecosystems, and perhaps even a timeline or a process that would have to happen for us to actually see these DATs deploy into DeFi protocols with smart contract risk, with custody risk, and all these different things.
Yeah, I echo what Cosmo mentioned. I mean, we'll sort of see if this actually replaces the foundation and labs, and it's just a great way to use financial instruments that have been around for a long time, access to public capital, to be able to really just go in there and really sort of accumulate the asset through staking, DeFi, all that kind of stuff. And I think it's going to be a great channel for, it's already happening for most of the top protocols, and yeah, we're going to see it happen for the long tail too. And we're going to be strategic in terms of helping these guys out.
Are you guys going to raise more capital and deploy more? Is this the beginning? What's your vision for this Helios company?
Oh man, I want Helios HST, or I hope the capital markets will allow Helios HSTT to be the preeminent leading Solana DAT, and I think we're well positioned to do that. I think we're going to have a lot of velocity out of the gate, which is what matters the most in public markets, right? It's how fast you can scale, not necessarily your starting point. And I think we're starting at a really solid foundation, and then that'll allow us to grow really quickly. And I think largely I have a lot of experience navigating the capital markets. I mean, that's most of my career is navigating the public capital markets, and so we're in deep talks with all the different ways that we can raise more capital, all in service of our Helios HSDT shareholders, but also in service of broadening Solana adoption.
So one thing for you then, Cosmo, Dan Moorhead, the founding partner of Pantera, went on CNBC and said, when asked, that Bitcoin had this longevity, Ethereum has this longevity, Solana's kind of newer, better, and there always kind of seems to be this successor. And I think the question was around, Dan, what's going to come and replace Solana? And Dan was like, well, I mean, really nothing. Like there's gonna, it's really good for, basically doing NASDAQ. Right now, it can do more transactions than NASDAQ. He had his well-articulated answer as to why there's not going to be something that replaces it. Do you firmly agree with that? Because what I would push back on that is that in crypto, all we've ever seen is successors come and replace the incumbents. And I know we're getting deeper and deeper into the markets, but Hyperliquid is a great, recent example of why perp dexes have been really hard to create a strong moat. You could argue that Hyperliquid may have it now or may not. So when it comes to Solana and Dan's conviction here on this, specific idea, do you firmly back this? What's your take on this?
Look, I believe that we will live in a multi-chain world. My observation is that a couple of observations. One is that protocols are flywheel businesses, right? They're networks that require density to really scale and develop a moat. And at some point, you reach escape velocity where your network is very, very hard to displace, even if your technology isn't like the latest and greatest. And so there is a huge scale and early mover moat that Ethereum and Solana both have developed, and Bitcoin for what Bitcoin does. The flip side is that when you think about what we actually need, like faster, better. Like I always go back to. Most of my career has been an equities analyst and covering consumer and internet stocks. I always go back to what one of the biggest stocks in my early in my career was Amazon, right? And Jeff Bezos would always say there's this like holy trinity of consumer demands that will never change, and they want faster, they want cheaper, they want more convenient, and that's what Solana is. It's faster, it's cheaper, it's more convenient, and that's why we're so pumped about it. And that's why for me, the clarity of the investment thesis is so obvious, because that's like how the greatest companies have been built. But there's always faster, there's always cheaper. But when you think about like what the use cases actually are, like, man, Solana's like pretty freaking fast and like pretty freaking cheap, and probably fast enough, cheap enough for anything that we need, at least for the foreseeable future. And it's not like Solana's a static thing either, right? There's constantly upgrading. We got Fire Dancer coming out. We got, you know, 0.0 increasing throughput. And so we think like Solana not being a static thing will continue to evolve and get better and better over time. And it already has this pretty strong, deep network effect.
Yeah, no, I agree. I mean, look, on transaction throughput, general purpose blockchain, Solana's got the lead. I think it's theirs to lose. I do think Hyperliquid and others could potentially make a dent if they focus on certain verticals. Like, of course, Hyperliquid has a lot of, you know, sort of traders on their platform and guys that are very sort of financially savvy. Or maybe you come across like other platforms that are focused on certain, like, you know, RWA use cases and things like that. So I think we will see a lot of verticalization where you can make a dent, get some traction, and potentially expand over to being more general purpose. But again, Bitcoin, Ethereum, Solana have a head start around that. Solana is just focused on that transaction throughput that is very appealing for a lot of use cases, like, you know, AI, DePIN payments.
Guys, last thing for you. I had the Framework Ventures guys on recently, Vance and Michael. We spoke about the, you know, just where we're at in the DAT idea. I think Michael was saying, like, if there's an inning before inning 1, that's where we're at. But people on Twitter were saying we're in inning 7 or 8. And Vance was like, why are we even talking about innings here? This is not the right way to think about the markets. The cycles are kind of stupid, yada, yada. So like very just bullish mixed with like this is a new world that we're living in. When it comes to where we're at from your perspective in this DAT, you know, phenomenon, where are we? Are we in the, you know, very early, middle, kind of close to the end? Like, is there an end? How do you guys think about the development of this DAT market, considering you guys, frankly, I mean, you guys didn't create it, but you know, you really accelerated it. You poured gas on the fire following strategy. Paul, we can start with you. Cosmo can close us out. It's been a great stream, guys.
Yeah, I'll be short here because I think Cosmo's got a lot more to say, but it's a very strong trend. It's a needed trend. It's not going away. We'll see some ebbs and flows along. You know, we'll see some consolidation like we did with the ICO market and whatnot. But again, like this is something that's bringing sort of a new set of investors, new strategies to the market, accomplished leaders and entrepreneurs that are really finding ways to, you know, asset accumulate and also just bring in the next generation of investors to come into space. So I'm excited. I think this is a huge thing.
Like, I also agree. You have to evolve as the market evolves, and you know, every day is a new day. And so I think calling innings is a silly game. It's like fun, but it's a silly game. I would say though that there's a huge difference between, like, when people think about the evolution of space, there's a couple ways to think about it. One is that you know, what we're seeing now is the creation of the genesis of a whole new category of companies, right? Like, these DATs didn't exist in a major way before March, April this year when we did that first Sol deal. Like, MicroStrategy was big and there's MetaPlanet, but really kind of no one else. There's some in Canada, but smaller. Mm-hmm. And so we had this opportunity, or entrepreneurs had this opportunity to just create a whole new category of companies. Like, rarely do you get that, right? And it obviously only happens once. You only create a category once, then it's created. And so we're in this stage where we're probably in the later innings of creating the category, but we're in the early innings of how much these can grow and evolve over time. And so I think when a lot of people talk about cycles with DATs, it's like, I agree, we're like towards the later innings if you're only thinking about the later innings of the genesis. But we're still early innings in terms of how much impact they can have over time.
Well, guys, congratulations on the creation of these DATs. We're going to give you some confetti, maybe a money rain. Hopefully we see Solana hold up well and continue. You guys can continue to accumulate. I think the big goal for the Solana ecosystem is going to be to get to that $10 billion mark for one of the larger DATs. So there can be, you know, more financial engineering to basically raise more and keep accumulating. We'll have to have another conversation in a couple months when these things have scooped up multiple percentage points of the supply of some of these largest networks, and talk about what happens now if the ownership of these networks is in these massive public companies at scale, what the ramifications are on governance, on the future of these protocols. We're definitely entering a more sophisticated era of the space. you guys are leading it. Appreciate both of your time and being here today. Paul and 𝘬𝘳𝘠𝗧𝗏, you're absolutely locked in, man. So thanks, guys.
Awesome.
Awesome.
Great chatting, man.
Thank you, guys. All right. Boom.
And Pantera, the largest.
Dude, they started DATs.
Dude,
outside
Pantera's been in this game going back all the way to like 2015, maybe even earlier.
Yeah, I know.
One of the first institutional size VCs.
Did I tell you that the story that the reason why I had so much confidence to decide that Hyperliquid was the one to ape on the second it launched was because I was with some of their team the night before in Hong Kong having sushi and drinks.
With Pantera's team, not Hyperliquid's team.
Pantera, Spartan, some of these others, man.
Yeah, the Spartan guys are great too. But Pantera's just been around for so long. I mean, I didn't, get a chance to participate in that one. So what were the key takeaways? How did you, I mean, when you're like, how broad do you go? How deep do you go into particular things? And generally, like, what stuck out to you the most?
Dude, they're so bullish on Solana. They raised $500 million for the Helios DAT. Crazy bullish.
Did you ask them why they chose the name Helios?
I asked them if they were going to change it. They said that they told Mert. Actually, that's a great clip that's going to come out. Clippers, if you're watching this, I asked the Pantera guys if they're going to change the name from Helios and what Mert decided, and they told the story about it. It was really funny. So they are going to change it, but it was just so happened to be that the company that they wanted to buy was called Helios. And they were the company that was willing to support the deal was called Helios. So they did that one. And yeah, so they did that. So Pantera is doing a lot of Series A investing on the venture side because they have a lot of size and because there's so much competition at the seed round that as long as they can get these deals in on the Series A side, they're comfortable with being in there. They're kind of like whatever. There's way less competition on the Series A because there's only 10 investors. We also talked about the kind of state of DeFi and how a lot of the Solana DeFi companies are going to be beneficiaries of this DAT. If you saw Camino, it went up like freaking 50% the other day after 𝘗𝘂𝘠𝗧𝗏 said that he was going to be participating in these and using Solana DeFi to get yield for the fund. So that was great. I mean, look, they are just set on wanting to use these treasury vehicles to raise more capital, to buy more SOL. SOL is one of their largest positions. And yeah, I mean, they think that we are late in the design of the DATs and in how much financial construction could be made, but early still in the overall picture that they see this going on for a while. Also, just generally, they have been involved in some of the regulatory work, and they're very, very bullish on the entire space. And so Paul put out this report that was like a 60-page report. I'll pull it up for a second. Here's on my screen, and then sometime next week we'll get the screen share dialed. And yeah, if you look at Paul's tweet, he put out this massive this kind of state of crypto VC article. And I think that was really, really well done.
And Pantera's done some great research over the years.
Yeah, because he wrote kind of just about how how VC's, working, what they're doing, yada, yada. I mean, dude, these guys led the M0 $40 million Series B. So you got to think that to lead a $40 million round, they probably invested in, well, I suppose they didn't lead, sorry, but they probably invested at least 4 to 5 mil, maybe 2 to 3, and then you start to think about, what the size of the deals that they're doing, right? If they invest 3 to 5 mil, they're happy with the 3 to 5x. They're not looking for 100x in Series A, right? And so, they said that regulatory clarity turned tokenization from a huge risk into a weapon. Paul was very bullish on this state of affairs. So yeah, it was an enjoyable segment. I mean, I thought it was fun. I thought it was great. And yeah, we got Frank next. So I'm pretty stoked on this.
Obviously, Frank does some great research as well. We're going to cover everything that he's been up to recently. Before we get into some of the recent things from Frank, I think it's no coincidence that DATs preceded ETFs. We've been talking about this ETFs. There's going to be a wave of ETFs that are now going to get issued. I think I think there's no doubt about that. ETFs are the retail vehicle of choice. This is what opens up regulated brokerages and people that operate and work and invest via these regulated brokerages. They can now day trade, they can go and they can hold and invest on their own behalf as well as through an advisor. So retail gets in after institutional. Happens every time. DATs were a primarily institutional vehicle. And so makes so much sense. It just makes complete sense now that after institutions have loaded up their bags via these DATs, which we may see more, but that thing seems to be coming to a close, and now it's ramping into this retail vehicle via these ETFs. We're accelerating. We're moving along.
Yeah, but I think CMS has a good point. We'll drop that one on Monday, right? Like, who knows who? Like, I don't think anybody that I know is gonna go and be like, like without the advice from somebody like us or something. Who's gonna just go and start buying ETFs? Who hasn't is your financial advisor going to call you and be like, oh, dude, like you should be buying this Avalanche ETF? Like, I don't know, man.
The only exception to that is not Coinbase, Hyperliquid, because Hype isn't listed on any of those other venues.
Yeah. Did you think John Charb's tweet was particularly insightful for some reason?
I just think it was pretty indicative that once these things go live, it's like the final boss unlocked. The final, like the concentric circles of people that are within the industry and kind of know how to get access. They've bought, obviously. Then we have this other wave, decentralized exchange, centralized exchange, DAT institutional wave. We're going and outwardly expanding the universe of buyers. ETFs unlock essentially the final boss of buyers. So I think after that,
then what?
How else do you exactly?
So that's like the stages of adoption that I think that we're seeing right with the space. I mean, there's going to be more and more buyers, but 10 trillion seemingly is not that high of a total crypto market cap, but it's actually going to require more than I had anticipated to get there. Like, we are already doing a lot more than I had kind of been thought of that we were doing to get to where we are today, let alone to get to 10 trillion. So
I think we got to use your imagination. Think about all the possibilities of where we still can go.
Well, yeah, nation states will get us to 10 trillion, right? But I don't know, like we're at 4.1 trillion right now, and we've had a lot of financial engineering going on in the last couple of months. So, all right, guys, we got Frank in the background. Frank's the head of content at GSR. Also a aficionado of other things in the northeast of the USA, I believe, maybe a lobster roll or something. We'll have to get his take on the best lobster roll in the northeast of the USA.
I had an absolutely iconic mustache, but by looking behind the scenes now, I think the mustache may have gone.
But all right, let's bring him up.
Still got the best mustache in crypto without even having the mustache. Frank, welcome to the show.
Thanks for having me. Long-time listener, first-time guest.
Yeah, man. Well, it's good to have you. We're sitting here at the intersection of a lot of the bigger kind of public markets, crypto markets, media. Obviously, we're doing the streaming format. You've got a lot of experience kind of building the block from square one. Being one of the early employees / partners there. Maybe just a quick intro about yourself. First time us meeting you, Rob, and myself. How did you join the block? Why did you start doing crypto media? And then take us up to where you are now.
Yeah, sure. So I started covering the space in 2018 at a mainstream business publication called Business Insider, which then changed Insiders back to Business Insider. And the market was a bit more simple to cover at that point. There weren't as many market participants. There weren't as many esoteric platforms and initiatives and companies. So a lot of it was just covering the market movements and what was happening offshore in perpetuals. And then at the end of the year, ETFs, or excuse me, futures began trading on CME and CBOE. And that's when the narrative of the institutions are coming kind of started cementing itself into the market. And that's around the time that we started the block, because we thought that institutionalization would happen quicker than it did. I didn't expect to be caught in the doldrums of a bear market for 3 years, and thankfully with the tenacity and the fortitude of a lot of the folks that were at the company at the time, we were able to weather that proverbial storm. And then, after doing something for 7.5 years of my life, I took an opportunity to apply the media and content skills that I had sharpened, waltzed editing and doing multimedia for the block within a trading shop. And that's not too far of a divorce from, my bread and butter work, which has been covering effectively the market structure of crypto, which is very much tied to the institutionalization and then also, of course, the regulatory backdrop, which today, I think in today's price action it's really evident the extent to which that has flipped. And when you look at, you mentioned, Andy, the pedantic, whimsical, wonky new financialization of new products coming to market. That's one force, that's one tailwind. But really, I think what we're seeing is where the market would have been years ago had it not been for one chairman, Gary Gensler, who I think really set the market back several years. And when you look at the demand in the recent IPOs that have come to market, the IPOs that he effectively banned from happening during his reign of terror at the SEC, it illustrates really the demand that there is in U.S. equities for crypto market exposure. And you saw that in the 6x, I guess, pop in Circle, the then 3x pop in bullish in those equities in the first day of trading. And then, we're obviously seeing that sort of like Titan. I think Gemini was a 14% pop and Figure was a 24% pop. But what that shows is that there was this demand that the regulators have basically blocked off, right? And really, I mean, it's pretty insane from my vantage point. I was just talking to a reporter at the New York Post about it, and the current SEC, especially in yesterday's news, that we're going to have effectively a more streamlined process for new crypto ETFs coming to market, which is a watershed moment and will lead to effectively a Cambrian explosion in new access vehicles to crypto. The current administration showing what could have been done, what would have been possible had it not been for the unbridled, relentless, capricious arrogance of the former administration.
Can I get a fuck Gary Gensler, or is that inappropriate for the stream?
I don't know. My grandmother might be watching.
But look, I think we agree with you, Frank. And just today, I saw you retweeted. There's a SEC is pushing through the generic listing process for these ETFs. Rob and I were kind of going back and forth about the impact of the digital asset treasuries versus the ETFs. I put out a tweet yesterday, kind of saying, "Look, guys, I spoke to the Canary Capital CEO a couple of weeks back. He said the timeline for these is pretty much mid-October. What is the rumblings in New York within these kind of media, crypto, finance world? You're going out for drinks. You're doing a coffee meeting with, New York Post media. What is the current rumblings? What is the rumor mill saying? What can you share with us with regards to these ETFs, with regards to this kind of public equity models and that stuff?"
Yeah, of course. I think to set the stage, right? The Bitcoin ETFs, which were among the biggest debut of a new financial instrument a year ago, still, so that, forget about the ETFs that are coming. That product still very much so has not been fully unleashed onto the street. So a lot of the activity that you're seeing is vis-a-vis self-directed brokers, people who are more comfortable with, dabbling in financial markets than more passive investors. And so this trend or this theme of 1 to 3% allocation to crypto in a standard portfolio, I don't even know if we're in the first inning of that. I think that the players are still tying their boots in the dugout, or their cleats in the dugouts. That's how early that process is. And I talk to people who are, trying to onboard the likes of Morgan Stanley, and the financial advisors that they're talking to are asking if you need a wallet to have an ETF. Like it's very much that early in the process of unlocking what is effectively the largest channel of wealth in the country, which is the advisor space. And so that is all to say that even with the Bitcoin ETF, which, across the 10 or so products that exist in market have billions of dollars under management, it's still very, very early for them. Those flows and that liquidity is still in the nascent infant stage. And we're at 117, right? With that still being very early. That's not to say that, and then at the same time, right, for the long tail of crypto assets, these vehicles haven't even launched yet. So that's on the asset management side, right? You could see that alone providing a massive tailwind for Bitcoin too, as the Winklevoss twins said during their debut, go to $1 million per Bitcoin.
Yeah.
And the other tailwind I think that's interesting is obviously this regulatory tailwind, right, where companies can actually access the capital markets and the public market specifically. And there was a bank that last night had a very large dinner with some of the top crypto executives in the space that are eyeing the public markets. Very large bank. I won't say which one it is. With all of the heads of their, effectively, I think their financial industry group for their investment banking division. And if you think of some names, they were probably at that dinner last night. And so one tailwind, right? You have the wave of crypto companies tapping U.S. equity markets is still, again, in the early stage as well. I mean, you think about the number of companies that are, we've had 4 recently go. There could be at least, there's at least 10 that I can think of that are that are in short order eyeing the markets in the next 3 to 4 quarters.
So,
yeah.
Well, I'd love to get your take on one of the more creative models that we've seen, and it's yet to develop. So I'm actually curious from your perspective how this thing could cross the chasm, because it kind of spans party lines, if you will. And that's Coinbase, which is obviously a public company on regulated exchanges. I was at Base Camp in Stowe, Vermont, this kind of retreat for the base portion of Coinbase, and Jesse Pollock, the leader of Base, said that they're starting to explore this network token. So then you would have this company that has circulating shares on regulated exchanges for Coinbase, but then its product base would have a network token. And so there's a few different angles to look at this. Some people are saying, well, how can they do that? Shouldn't shareholders be furious unless that all goes to them? But just from an innovator standpoint, this is a really interesting model to have a dual offering on-chain and in a regulated off-chain offering. How do you kind of square this balance? If you're Brian or Jesse, how would you go about kind of rolling this out so that it's well received?
If I was Brian or Jesse, I don't know if I'd be on the show. I'd probably be somewhere in the,
Buddy, we just had Jeremy Allaire on the show. Come on now. Come on.
I'm kidding. I would just be doing it from my boat or something. No, it's a really good question. And one thing that I would say is that I think it's a question that the analysts who cover Coinbase have yet to sort of wrap their minds around when they think about the performance of the stock. It's still very much tied to that sort of take rate from trading revenue, and the business as it's viewed by the analysts who cover it, which mostly are folks who, cover brokers and exchanges, they've really kind of ignored the value that sort of is unlocked from networks like Base, or from the venture book and the exposure that Coinbase has to the crypto economy writ large. And I think Coinbase has done a very good job hammering home the messaging that they're not necessarily just a broker and exchange or a trading platform, but are trying to rebuild the economy via crypto rails. But that's not something that the street has fully gronked or appreciated. So it's kind of a two-way street where there's this gap in understanding. I guess the actual question, though, about like the extent to which a native token maybe dilutes or extracts economics from shareholders, I don't know if it necessarily does, because you would imagine that the revenue that they get from Base is then, going to kick up to the broader Coinbase entity. So I think it's a net positive for all people involved. It just gives the company more levers to play with.
Very curious to see how it goes. I saw you bull posting Robinhood, and they've went and launched a chain on Arbitrum, and
they're getting close to doing it. Yeah.
Getting close to do it. That they've expressed their plans, and also their plans to go and extend that into its own chain, external to any dependencies on Arbitrum. So it just naturally occurs to me that Robinhood may be exploring and considering similar business models of having a dual offering as well.
Robinhood's a generational company. It's one of the most impressive firms operating in the world, in my opinion. And I mean, even outside of crypto, if you look at the 401k product that they launched, I think it was this summer. I mean, outside from just being, I mean, these are beautifully designed products and seamless to use, easy to understand. And the only hiccup, right? Like, again, they were another victim of this sinners in the hands of an angry God regime run by Gary Gensler, where had it not been for that, they would never have had to delist tokens that clearly now are not securities. But outside from that, I can't think of another company that has had so few hiccups in sort of rolling out phenomenal product for their clients.
Frank, I just want to bring it back in the same vein here with regards to Robinhood, with regards to Coinbase. The main driver for revenue for Base, the L2, is just simple sequencer fees. They derive, millions of dollars a month in ETH paid to them by their end users, and their fees are extremely cheap as they are, comparatively to other L2s. Maybe Polygon is cheaper, maybe a couple others. The whole meta right now is buybacks. It's, Hyperliquid's the best, and Pump.Fun is buying back, and everyone's happy, right? If Base decided to buy back the Base token with sequencer fees and not allocate that in some capacity to Coinbase directly, like in a direct payment, versus more of like, I'm sure Coinbase shareholders would maybe have some sort of token allocation or something. But should Base want to create more of the on-chain economy and keep the on-chain on-chain, how would you feel about Coinbase's position then?
In terms of the value that would accrue to shareholders?
Yeah, in terms of what is better to hold, or would this then cause an issue potentially?
Well, I mean, I think the holders are going to be totally different, right? Like the people, I mean, the people who are, now that Coinbase is, right, part of, the broader, the S&P, that's a totally different investor group that's not going to be investing for Coinbase upside vis-a-vis Base, right? And sure, there are probably a lot of folks who would invest via Base that might also hold the underlying stock, but they're probably going to hold it and think about it in a different way. Probably, for me personally, right, like I hold Coinbase as part of a Roth investment account. So I think it's just going to be, those are just two different types of profiles. And so the audience or the overlap of people that maybe will be exploring the outside opportunity betwixt the twain is probably small, I would say.
Yeah, I agree. I think it's different. It just brings the question, like, does two separate assets or, investment vehicles create more value, or does it just, split the value? And I guess that's yet to be seen. Frank, I want to shift gears here because I think the whole world is entering a different era of marketing, communications, content. And so I want to kind of hone in on GSR as a great example. Start broadly here. I just saw a post that 𝘗𝘂𝘗𝘓 was hiring a clipper. That means that 𝘗𝘂𝘗𝘓 is going out there, probably finding some like 20-year-old native person who has been doing this for like 3 years as a young person and has the internet native feel, and they're hiring a clipper. GSR, one of the largest funds and successful firms, just hired Frank to be their content media guy. There are endless examples of financial and large companies hiring influencers, Bread Guy, Mega ETH, ICO Beast. List goes on within crypto Twitter and beyond. John Wang just got hired for 𝘗𝘁, a couple others, right? And so when you're thinking about this like newer era of crypto media, of crypto content, of comms, right? As we are bleeding into the actual real world, let's call it now, better regulatory regime, we're getting a bit more of a positive perception, et cetera. How do you think about crypto media and this new format and this new way of actually creating content, and specifically for GSR, right? It's like in the past, sure, GSR might have a CMO to help do interviews for their founders, or maybe kind of like, do some social media posts. But now all of a sudden, Frank's profile with a large audience becomes like this face, becomes a big part of the brand, and it gives a whole nother kind of layer to this thing. So take this wherever you want. I just wanted to set the stage for the last 10, 15 minutes and really kind of just nerd out about where media is in today's age.
It's a good question. So I had a friend of mine who texted me the other day asking if AI would impact, specifically he asked, which was funny, the role of an editor-in-chief at a media organization, which my answer was no, not really, because the role of an editor-in-chief is more so to kind of guide the strategic vision of the newsroom. If anything, AI will probably impact the actual number of folks you need to staff a newsroom. So it would impact journalists. And so it's difficult to have this conversation in a vacuum without thinking about what's happening in media, generally speaking, which is that you have the rise of AI, which is introducing new content forms into market, a lot of which are, erroneous or disinformation. I'm sure a lot of people have been on the other end of a ChatGPT hallucination. And you also have, thinner margins and a lot of newsrooms as a result of this growing trend of distrust in traditional media institutions, resulting in a lot of folks within these newsrooms going independent and basically creating entities around their own personal brand. And we saw that very recently with Alex Heath, who just he's a veteran reporter in technology, kind of stand up his own media entity effectively. And we've seen a number of there's a number of those examples recently. So there's that trend, right, where the individual, right, really plays a key role in trust versus the institution itself, right? People want to read Andrew Ross Sorkin, not necessarily the New York Times, or in the case of Alex, right, they want to follow Alex's reporting, not necessarily that of, I think he was at Fox, if I'm recalling correctly. And I think that's the case with most outlets. And I think the same thing can be said of, and because that's happening, right? Because there is less emphasis on being in the New York Times or being in Fortune or being in any media publication as a founder or as an organization, as a firm, because of this growing affinity for the individual, which is an interesting conversation to get into why that's happening. I think it probably has to do with just this generalized distrust that's growing in all institutions.
Corruption, bias, yeah.
Yes. This growing affinity for the individual, I think, raises an opportunity for firms where it's like, okay, I don't need to be in all of these publications because the people aren't going to them anymore or have the same degree of trust in them anymore. So wouldn't it just be easier, to an extent, to get one of those people to craft and shape messaging and information in-house? And I think that's effectively the storyline. At the same time, right, the way we consume information is changing. And I had a colleague at the Block who runs our multimedia efforts. His name's Davis, and he's really great. We were going back and forth, and we do a lot of this. We dig into a lot of the boring details of media and marketing. And there was a survey we were looking at that suggested that something like 80% of all marketers surveyed in this survey emphasize the importance of video content. And so, it's something that takes a little bit more personality, a little bit more skill than just like writing blog posts, which people aren't consuming in the same way. And you've seen this in a number of recent Series A's announcements where they're not putting out the standard press release and getting the standard TechCrunch article or the standard Fortune article. They're putting out these like cool videos.
The old 𝘗𝑯𝘓 is the famous one there. That guy
Yeah,
really
exactly.
is an animal. Yeah. But that stuff is like the Paul Revere, the British are coming after that. After that one, it was like, I mean, it was happening before, but I think in like the Web 2 VC world, that thing really just set the stage for what's coming.
I think that's right. And I would describe it as such.
So, okay. So Frank, so that encapsulates the personal branding, why there's this distrust with institutions and media at large, as well as just this idea around people buy from people, people enjoy people. And, you really gave us the full 3,000 or 30,000 foot view around general media. This is happening. And this is a trend that I talked to Jan from Blockworks about in New York probably 3 months ago. We spoke deeply about this and how, part of his house of brand strategy, why he is kind of been, big on his personal brand. It's just extends. And so when it comes to GSR specifically, in your thought process for what you want to do as the head of content for a company that is, let's just say, not notably known for content, or, probably existed just fine without it. In fact, did. Now you kind of come into the space. What is what does Frank's, roles look like at GSR? How do you help them? And maybe you could then explain why you think everybody needs a Frank. Because you're doing X, Y, and Z for this firm, and it's helped them in this way. Just kind of curious, what the real value is behind having someone like you.
Well, I make really good lamb chops, I think. And I'm nice to be around. So, but I think the question's valid. When you think about a competitive market, and a market where, listen, at the end of the day, you have to compete with a lot of noise in a market where if you're a serious project and then the next day the president of the United States launches a meme coin that sucks a lot of the oxygen out of the room, it's tough to sort of have space for, or even DATs, right? I was reading, I think it was the Block or CoinDesk, and there was one day where 80% of the articles on site were about DATs. And so in a market where the attention is the sort of the task of garnishing of attracting attention is so difficult, if you, as a service provider, can provide a vehicle for attention, that can be very valuable to client or to potential partners or to potential investments, right? So we do have a VC, right? And so if in a competitive environment where people are trying to write checks, but founders want more than checks, right? They want connectivity to potential clients. They want marketing. They want help with hiring. That's something that can move the needle for them in terms of making room on the cap table for you. And this isn't too dissimilar. If we look at U.S. equity markets, right, there is very little difference between the actual service that's provided by New York Stock Exchange and NASDAQ, for instance. I think the fees at New York Stock Exchange are a little bit higher. At least they were when I worked at NASDAQ a decade ago. But the actual product of tapping the public markets is effectively the same. NYSE has a bit of a different model, a blended human model with DMMs that sit on the floor of the exchange, and NASDAQ's electronic. But in being in that seat 10 years ago, the main differentiator was, and what they've built on, is access to media, marketing capabilities, and activations, right? If you're a founder looking to go public on New York Stock Exchange or NASDAQ, you're weighing the question of, do I prefer to ring the bell next to where CNBC films in New York Stock Exchange, or do I want my face plastered on Times Square? That's not a very technical trading question for a founder to wrap their head around. It's a marketing question. And when I think about a firm like GSR, I imagine that might be a similar question for a token project that's looking to start trading. Which service provider might give me a little bit more juice in terms of exposure and access to to the attention economy of crypto? If that makes sense. I don't view it very differently from that analogy.
It does. You're explaining the trade-offs at play here as founders make decisions and they decide on who to hire, who to work with, who to partner with, and who to take investment checks from.
Which is kind of like this media VC model, Rob. Like we're basically running this model. We have a separate fund where we're gonna roll the full new brand out and whatnot. It's all prop cap and whatnot. But essentially, it's like, this media VC model, Frank, it's just, I mean, you joined the big boys. Rob and I had to look inside our pockets to get the VC side started. But we're 26. We're just it's a journey here. But this is essentially the model that we're describing. It's like this media VC investor model. And then you can do events, which you guys do at major conferences. I'm sure there's going to be one in Korea and Token, which we'd love to be at. And then you just get really high quality people in the room. Guy like Frank's there. I see a guy like Frank there. I'm like, oh, that's Frank from Twitter. Oh, I want to go talk to Frank. And then it's just this flywheel. And so this media VC idea it is an interesting paradigm shift from traditional media, traditional regulated investing. Crypto kind of flipped the regulated investing thing into fully democratized access as long as you're accredited, have some reputation, et cetera. And then now with social media, we have the ability to just create and build your own Atlantic or your own whatever it is. So, Frank, that's kind of how I'm thinking about it over here.
No, and it makes a lot of sense. And Andy, what you're hitting on is something that I saw watch play out in real time among the market's most secretive HFT firms. When they got into crypto, I mean, firms like Jane Street to a much lesser extent, or firms like Jump, it was really the first time they had ever talked to media or had any sort of public-facing external presence, because they had to engage with this new generation or class of founders, right? Before Jump got into crypto, for instance, their website was just Jump Trading.
Yeah, classic.
With the 5 or so cities in which they operated. And now obviously it's a bit more open, and every sort of trading firm has gone through that evolution to approach this current market.
Yeah. As we first kind of ran through with that phenomenon, it kind of occurred to me that maybe technology was the one that brought the barrier of entry down, but it actually just seems more like it's just the maturity of the industry. maturity of media grew into social media and democratized it and brought that barrier of entry down. And now anyone can kind of spin up their own media entity. Similarly, you have that in crypto, brought the barrier of entry down. But early on, like you're saying, market makers actually, even though the technology might have been better, they actually had to kind of figure out and navigate the industry and become a little bit more public until the industry matured. You know, now it's a little bit more permissionless.
Yeah.
Frank, I think we're running up on time here. I do have just one question for you because I saw that you recently had a birthday, maybe last month. So happy birthday. Happy belated birthday. And the menu looked delicious. I think maybe my invite got lost in the mail. It's okay.
Next
year. Post office isn't great. But I'm curious, do you have any advice to your younger self, you know, maybe from a decade ago? What realizations have you made as you break through into your 30s?
Wow. Well, you've made me feel very, very old. One thing that I would say is that it's super important as a young person in any space, but in crypto particularly, because of how fast it moves, is to really keep an open mind as it pertains to people and projects, right? Because and to, you know, people, you know, as a reporter, you kind of cover their stories and their journeys. And you know, one thing that I've tried to or strive to do over the last 8.5 years is create a venue where people, you know, regardless of how early they are in their process or how new they are to the space, can share what they're building and what they're doing. And, you know, focusing on or really only entertaining established people can be a bit short-sighted, because people just, I've seen, you know, people just blow up in fantastical ways. And so, you know, I guess that boils down to not being a prick.
Pretty much. I mean, that's what I was thinking. Just don't be a douche.
Yeah.
But that is a really good thing to end on, Frank. And we appreciate that. I've experienced that. I'm sure Rob has as well. You know, you can't judge a book by
don't discount people.
Yeah. Yeah. Thank you, Frank.
Yeah, of course. Right, Thank you.
Thank you,
sir, man.
We'll see you next time.
Take care.
Thanks for calling in. Peace, buddy. What do you think about the last quote, Rob?
Don't be a prick. I think that's pretty good.
Don't be a prick. Yes.
Yeah. I think that'll work for you no matter what industry you work in. So that's pretty solid.
Dude, how about the personal brand stuff that we were talking about earlier? It's all about the person.
It's on point.
We're gonna get too dialed, man.
I find it interesting that like this hasn't always been the case, but like we talk about it like it's an emerging phenomenon.
Look, because influencers are new. There was never a platform previous to social media where I could be a person and be heard so loud, other than like the radio. Like if I had my own radio show.
You could write books.
You could write books. Or
authors
radio.
Kind of had their own voice. And ultimately, I think it is.
And then you had blogs. No, you had blogs. You had blog writers.
That was right.
Yeah.
And then from there, you had social media.
And so now it's like
personalities, characters.
It's the same reason why the brand account doesn't get as much engagement as the personal account. It's the same reason why the brand, the person should deliver the news. If Robbie and Andy go raise 20 million for a fund, one of us is dropping it. It's probably going to be me, right? I'm dropping it. Why? Because that thing's going to go to trillions. Rollup can have its own post, but you know, so it's like these different like there's a reason why when you think of GSR, you think of Frank now. It's just trippy. Like, I mean, we got Benji in the back, but this is just an ever-changing phenomenon.
I think it is interesting to explore why this is the case. And it's because seemingly brands are more corruptible than individuals. And you can
hide behind this veil of being like the brand.
Exactly. You don't know who's interested or who's involved.
Yeah. Yeah. And you don't know whose motive, who's pulling what string behind the scenes. Whereas if I know that it's you tweeting it, I know that unless you're corrupted in some capacity, which individuals are equally corrupt, and then when you put them together, they become a big, giant corrupt thing. But at the same time, we also have a lot of ways to work together and have positive outcomes. That being said, yeah, I think I know it's Rob. I trust Rob. I trust Andy. It's like the roll-up's great, and it's gonna, people trust the roll-up, but like GSR, I mean, tell me who else works at GSR. I mean, I know that we're not like close to them, but like I
think we've met a couple of those guys at conferences, but I see your point ultimately, and especially if you have met someone before, they've met you, they trust you. If you are to trust the roll-up, that is the question.
Yes.
Who else is at the roll-up? Who else is an interested party? It's especially as these organizations grow bigger and bigger and bigger, it's almost effectively impossible to get to know everyone at the organization. And so you can't check all those boxes, but it is easier to check those boxes for an individual. I'm excited to continue our decentralized sign-in.
Let's get Benji up.
Yeah, let's get Benji up. He's been very patiently waiting. Benji,
hey,
thank
Benji,
you
what's up, man?
For joining.
Conversation you guys were just having.
Yes.
Please.
Yes.
So did you guys ever watch Dirty Money?
That sounds familiar.
Okay, so Dirty Money was kind of like a docu-series. I think it might have been on Netflix. I forget which streaming platform it was on. But one of the things they went through was just like different shady business enterprises in the past. And one of the ones they went through was HSBC. So HSBC was basically financing the cartels. So they would just like accept, bags and bags of cash into HSBC, take it, ask no questions.
Wow.
Their penalty that they got was basically like, I forget, but single-digit billions in terms of fines. It was a speed bump for them. I mean, like, it was basically like a smack on the wrist, effectively, given how much they were making from from financing these cartels. And I think that just to bring it back, it's like when the entity is accountable and no individual person feels the pain, then there really isn't an incentive to be a good actor because you can hide behind the veil of the brand. But if you personally are wrong and you personally feel the pain of engaging in some sort of bad behavior, whether you're deceiving or engaging in nefarious activity, and you feel the pain, it really is a good inhibitor to being a bad actor. So I think this is where it comes from. It's like some combination of like authenticity that the market is demanding and accountability. I don't know if you guys just saw this news, but like Charlie Kirk's wife taking over. Because like she's like who else works at Turning Point USA? Like you don't know, right? But she's the next closest person, I think, to that brand to take over and like the right face. So anyway, I think it's a super interesting point. I mean, at the end of the day, your guys' faces are the roll-up, right?
Yeah.
Your guys' posts get way more engagement than the platform. So
exactly, it's trippy. It's super trippy. But the platform has provided us and everyone else who has a platform like that is a brand outside of just their person has also provided legitimacy and provided a whole sense of like it makes it feel bigger than what it really is. Like it makes it seem like it's not just like a one-man show or a two-man show.
It's almost like a vessel to like carry the message. Like we kind of are our own vehicle for that in our individual brands, but we also kind of have this as like the arena, like the venue in which people come together. At least that's kind of what it feels like.
Totally. Anyway, I think
really cool show though. Thanks for telling us about that.
Oh, of course. No, definitely recommend it.
Yeah.
It's also interesting, just to segue a little bit here, that individual and the capacity to be wrong and people kind of like let it slide. Like 𝗗𝗏 the other day was like, doesn't matter what the FOMC does, we're going to be down afterwards and like the market's going to be lower no matter if we cut 25 basis points, 50 basis points. Well, we're much higher today. If you hadn't seen the market, you probably wouldn't do that.
Thanks, Rob. Let's fucking go.
And so, but like people are going to continue to listen to 𝗗𝗏. It's like they're not going to hold it. Maybe if you can't be wrong too much, but you can kind of just put things out there, and people will sort of forgive you if you make a mistake. And maybe on an entities aren't necessarily able to do that on an ongoing. No one's really able to do that on an ongoing basis, but it pays to kind of say what you think and put it out there.
100%. I know you guys. So I watched your guys stream yesterday with Paul. And know you guys love talking philosophy. Don't want to go too deep down that rabbit hole.
But yeah, exactly.
There's an interesting model by which so you have like OnlyFans and subscribing and like free to follow. Like there's different monetization models for exclusive or non-exclusive content. I think a really interesting one is the one that 𝘗𝘓𝘵 proposes, where it's basically like you basically give a percentage of your future earnings to a platform, or there's some way to track based on who I follow, how much income I get.
Almost like a record label.
Kinda, but it's a mechanism for like charging for content. So it's like, you know, if I give you stock picks and you make money, like everyone can see how much money my followers are making, right?
Yeah, I think
so
this
anyway,
is
so Anson could be wrong, but if all his followers are losing money, that should be transparent. You know, like you're making bad picks. Like bring back GSR, who like just called everything.
Yeah. I think the prediction market meta is kind of trending in this direction.
It is. It really is.
Because we can in theory spin up a market, right? Say 𝘗𝘓𝘃 is getting a lot of attention these days. Spin up a market on 𝘗𝘓𝘃, have it kind of plugged into our stream and have people vote on it or bet on it, right? And then we'll be able to see, like, some people make money, some people will lose money, and then us as creators can kind of take a cut because we were sort of the vessel that carried that market and generated some trading volume. I think 100%. Another like interesting parallel here is that, and we drew this as a takeaway.
Please take us to DeSci, Rob. Please.
Actually, that's exactly what I'm doing. But I'm gonna draw this connection because we brought it up after Paul's episode yesterday, which is that this creator economy model is very similar to the like paying, like knowledge to earn kind of model. Like in decentralized science and like bio protocol specifically, they've kind of built up this like knowledge graph of different scientific discoveries. And there's kind of like these network effects of like, oh, well, we had that one over here and that one over there. You're kind of like incentivizing the creation of that where it wasn't there before. And the parallel in the creator economy is that now we have creator coins and we're able to kind of continue to push like, oh, this is what good content looks like. This is what good science looks like. So the hyper financialization kind of gets a bad rap, I think, sometimes, but generally the trend is continuing because my understanding is that like inefficient markets seek efficiency and they'll just naturally tend in that direction. And so with that, I'm curious, you know, have you seen this similar, is this the right way to think about it? Have you seen this play out in the DeSci world as it continues to proliferate?
Maybe not yet. I don't know if it quite has yet. And look, I don't know if it's just like a given that markets trend toward more efficiency. I don't have a good like hypothesis for why that is. But I think that the way that we see the kind of like creator capital markets meta intersecting with what we're doing is, I mean, if you go onto Pump Fund and you look at creator capital markets as they are, you know, tokens are pumping and dumping within the hour. It's basically like, how much can this person do something ridiculous to keep attention for as long as they possibly can? And it typically doesn't last more than an hour, right? And then it's over. And like, that's how long you can keep attention for, you know, just like putting your face on a stream. We see scientists as the most upstream creators of everything in society, right? Like, it is the science and the knowledge that you're talking about that drives all product development, that drives basically our technology forward, right? And so we at Pump Science, this is it, and bio to a certain degree, what we're all doing is trying to take these creator fees and just direct them toward research, which just has costs associated with it to develop that knowledge and to do so in an open way. But have these scientists and give them the platform to not only tokenize their ideas and fundraise for them through these creator fees, but then also do product development and actually create things from their discoveries. So I think like knowledge is valuable, but it's valuable insofar as you can create products from it, right? It is ultimately end products that create value. Knowledge is like cool if you like thinking about ideas, right? That's the value it provides. But products are really like what touch the market and like touch people and improve their lives, and that's what we're trying to do. So it's science for the sake product development. And in our specific case, it's life extension.
Totally understand and agree. My mom's a pediatrician. I showed her the segment from yesterday, just like 5 minutes of it. I thought she would find it cool. I showed it to her, explain the 80% of time scientists and researchers are spending on trying to actually acquire funding. The 20% is literally doing the actual work. And so, you know, she actually mentioned a good point where in today's world, much less than in the past, there is a very, very big pushback from the administration of how much funding they're trying to give to medicine at large. Like, it is gotten cut off significantly since Trump. It has been really slowed down. And so I'm curious if you think that what you've seen on the market, given Trump has been amazing for all of the entire crypto, landscape and the entire admin. It's not just Trump, but he's launched meme coins and shit, but it's the entire admin and the entire regime. So has it been negative for, decentralized science? Is it harder to get funding now? Kind of maybe you can just give us a little bit as to like how that process is going. We didn't really talk about it at all with Paul. And maybe it's different in your case with pump.science and kind of a different kind of area, but just curious.
Yeah, no, I actually love this topic, frankly, and I'm excited to talk about it. But it is so beneficial for us. I can't even tell you, for a number of reasons.
Good.
Here's reason number one. If you are a researcher and you're typically used to getting grant funding, right? And that's just what you expect. Like you apply to the NIH for funding and you get it basically every time without a worry. And now all of a sudden that's gone. Now you're looking at other options.
Right.
And we are one of those other options, right? So finally, we're starting to land with a lot of scientists that were otherwise like, I don't need you. I can take government money. Why do I need to take this stupid crypto? Have to figure out how to make it work with my university who is risk averse, right? And like, they don't want to touch any of this, right? So, but now they're willing to entertain the conversation. So hugely beneficial for us on that point. Here's point number two, which I think is actually, touches a bit closer to home. So the way that funding gets dished out is taxpayers pay taxes. Those taxes get allocated to the NIH and other government bodies, and then it gets sent to labs. But the problem there is obviously principal agent, right? You've got these people who are sitting in these grant allocation committees who are determining who should get the funding. And you have central actors who have their own agenda, and it doesn't necessarily represent the agenda of each individual person, right? It's classic principal agent problem, frankly. There's no other way to put it. It's like, they don't represent my wants and needs, right? They don't represent your wants and needs. They represent their own. And what are theirs? Sometimes usually they're basically former professors in academia, and they want to elevate their own standing in science. And so they continue to fund ideas that make their work look like it was foundational to the field. And this is the classic problem you saw with like Alzheimer's research. We have not advanced in Alzheimer's for freaking like half a century. And there's been tens of billions allocated toward it. Why? Because we keep going after the same hypotheses, because that's what gets funded by the people that make the decisions of what to fund. And the result, zero progress. Instead of funding people who maybe have like non-consensus ideas, that's what capitalism is good for, is like funding non-consensus ideas that can potentially return a lot, because by definition, they're non-consensus from the beginning. So why we're really excited about this kind of like general, I would say like reducing the power of the federal government to allocate research funding is it's a fixed sum game. You're putting the capital and the power back in the hands of the individual. And so what you see is a lot of people are just interested in, how do I maintain health? How do I focus on longevity versus, how do I cure Alzheimer's once I get it? It's like, how do I prevent Alzheimer's? That might not be in the incentive structure of the medical system as it was, but in this new world, it's potentially people call it medicine 3.0, but it's this more individualistic preventative type medicine that only individuals have the incentive to do, not the pharma companies, not the hospitals, both of whom get paid when people are sick. But anyway, so I think this is another vector why this is actually like maybe a good thing.
there's an example of what you were talking about, and I forget the paper and the topic, but the researchers are making these outlandish claims, and they're actually so corrupt that they're faking data in order to prove things wrong. And then they use that as leverage to go and get another grant. Like, look, I disproved this thing, but they were able to disprove it because they boiled down the data and used such a small sample size that it was able to show contradictory results, therefore lead to this new discovery in quotes, obviously, right? And so what you guys are doing is more so aligning interests. Also, the kind of point yesterday was that you're bringing down the cost of capital, because now you're able to fund scientific discoveries. I think the quote yesterday was like $500,000 all the way to 50. It was an order of magnitude less that it costs, and therefore pass those savings on to not just researchers, but also consumers at the end of the day. Benji, I'd like to get kind of an update on what is currently going on at Pump Science. And also, because we've had a couple of these other DeSci projects out there, it's a pretty niche community. I'm sure you're tight with, Bioprotocol and the guys at Paul and those guys. How are you working together with other DeSci projects to ultimately, grow the wealth of knowledge across the space?
Yeah, that's a great question. So as for the current status, there's kind of like the crypto on-chain component, and then there's of course like the scientific component. Starting with the on-chain component. So we at Pump Science, we launched our launchpad on July 31st. And basically what the launchpad is it's like a bonding curve to AMM migration protocol, basically to create, the creator capital markets for scientific research. That's what it does. So the trading fees, 70% of them go to the scientists. Why are you laughing?
Dude, it's just like, it's just such a fun, like this capital markets, like suffix for anything is just hilarious to me. Like soon enough, we're going to get like freaking dog coin capital markets, and it's going to be like, all right.
Well, look, I think you pitch it as crypto. Everyone's like, SBF, you pitch it as internet, you pitch it as internet capital markets. And it sounds like equity capital markets or debt capital markets, right? Everyone's like, it's like buttoned up crypto or internet capital markets, So I think it's really good branding, frankly. I think it's really good branding.
Continue, please, Benji.
No, you're all good, dude. It's hilarious and true. Every cycle we get a new brand. I love it.
Yeah. And so in Pump Science's case, you guys are thinking about it in a similar way.
And I mean, look, I don't know if we're smart enough to innovate on tokenomics, but we can innovate on application, right? And so we're taking inspiration from these other protocols that are going viral for meme coins, and we're just taking the same tokenomic structures and we're just applying it to this new application, which is for science capital markets, right? And so yeah, that's basically what we've done. We have our own custom bonding curve. We migrate to Meteora. We have dynamic fees to reduce sniping, and yeah, we take the fees and we put it toward the scientific research. And maybe for those of your audience who are less familiar, all of the experiments that we have are kind of like it's a la carte. So we don't allow you to run any experiment that you want. It's not like you can give cat piss to chameleons. Like that's not an option, right? What we do is every token corresponds to a specific compound, like a drug, caffeine, L-theanine, Adderall, whatever you want. And you can test it on animals, different types of animals, to see whether or not it makes them live longer. Lifespan is a really good surrogate for health. If a compound or drug increases the lifespan of an animal, it's probably good for you, right? Not a guarantee, but it's like a really, really good kind of, the same way that TVL was a good metric for DeFi, like lifespan is a really good metric for longevity. Dude, what you got with the smirking? I could talk to me.
Dude, no, I mean, I was smiling because I'm enjoying what you're saying. I think it's funny, Benji.
Okay, awesome.
You're taking it in a way that I'm like not believing you or something.
Okay. Yeah, no, I mean, dude, I'm scarred.
I was giving Paul everything.
I'm scarred by 𝘬𝘓𝑚.
I was giving Paul everything. I was giving I shot shots at Paul. I'm hanging out today.
Awesome. Okay.
I'm just enjoying.
Amazing. So so yeah, like we've got this on-chain protocol. We've done about 22 million in volume so far. We have fundraised for like mid 40s in terms of worm experiments, like 45 worm experiments, 20 something fly experiments, and I think almost 15 mice experiments we have gotten funded, which is like, there are numbers on the board, you know, like I never thought we would get here this fast. It's been a month and a half and we have fundraised for a ton of science. And so the question is, what does that actually do, right? It generates shots on goal, right? So now we have the opportunity to develop IP and basically just like discoveries on these different compounds that are being submitted. And in the hopes of making discoveries, right? Like at the end of the day, you know, science is a, you know, the slot machine, right? You are just like testing to see whether things will work. There's no guarantees, right? But the more shots you have on goal, the more likely you are to you know, find something valuable. And so, you know, that's what our community is all about. It's like they're basically, a lot of them are, you know, former meme coin traders who are kind of jaded by the pump and dumps that they see, and they want to, you know, participate in token markets that feed their soul in a different way, that actually contribute to humanity in a substantive way, more than entertainment. And so that's kind of what we find in our users and in our community, is, you know, not all of them are scientists by any means, but they're all science curious and they want to participate in something more meaningful. And so, yeah, like we've run, I need to get the exact numbers in my head in terms of like how many experiments we've run so far, but, you know, I would say like, you know, something close to, yeah, like 50 worm experiments have been run, something close to like, yeah, probably 20 fly experiments are either completed or en route. And we just ordered the mice for a longevity mice experiment. And I can get into the experimental details if you're interested in, but everything is about life extension, right? And this is, and we chose that because the typical pharma and biotech spaces are not focused on it. It's very much like a blind spot of theirs because because you can just charge more for treating disease. And so they're all focused on that. And we see a massive opportunity in just supplements, health, life extension, whatever you want to, wellness, whatever you want to call it.
And so who exactly is conducting the experiment? Is it you guys or is it a team that you've funded?
Yeah, it's a great question. So as far as the user is concerned, we run the experiments. When they mint their token, there's a legal agreement that they're signing that says, that obliges the platform, Pump Science, to run the experiment. But we outsource that obligation to labs that we white label. So there's a few labs, a few of them are in Switzerland. One of them is here in the US, and they run the experiments for us. And that just makes it super easy to scale, right? We're just developing pipes with them. You know, we send them what compounds to run. They send us back data in just very standardized ways. And if you think about it, like our goal is to basically be like the red zone, but for science. You know, we're just streaming, and this whole thing bottoms out at content. And people like you to come in and interview all of the scientists and be like, why is your compound promising? You know, what is the data showing, right? It starts to look like kind of equity research, but it's obviously very like scientifically minded. So it looks like biotech equity research. And we start to release like trials data, and we like look at the press release and like, is it working? Is it not working? And we're just trying to do this all in an open and transparent way where, you know, people can see the data in real time versus in the typical biotech space where it's just a pure insider game. So I would say like very much in the same way that Anatoly was sick and tired of getting front run stock trading and decided to make a fair game, I would say like we're trying to do the same thing, but for biotech. We don't want insider games. We don't want front running. We don't want insider trading. We just want pure markets that all get information at the same time and can make trading decisions accordingly.
Dude, let's go, Benji. Dude, honestly, man, if True wants to be bearish, whatever, man. I mean, look, he's probably got a lot of good points. He definitely has a lot of good points. You guys have a lot of good answers. But, you know, people are thinking in a very boxed in manner in our space. It just happens, right? And so at least props for trying to, you know, get out there and have this vision of, okay, you've got this entire platform to learn about it, to educate. You've got the actual experiments happening. You've got the financial part. You know, I could see it end up being a true kind of hub of science effectively. I mean, it's going to be a lot of work. good luck
No
to you.
kidding.
So I'll see you in 3 months, see what's going on back on the show. But
yeah. Awesome. No, I really appreciate that, dude. It means the world, like more than you know. There's so much FUD. You have no idea. Like I've gotten death threats like many times this cycle already. And
yikes.
when you launch tokens into the world and put your face behind it, like it's not pretty when the markets come down. But we're so committed to making this work. Like we're so bullish on it. We can just eat the glass, take the 𝘬𝘂𝘓𝘂 to the face, take in their feedback, and just like implement it, frankly. Implement it.
Awesome. Well, keep up the good work, Benji. We want to see some scientific discoveries. Bring them on the show. We want to be part of the biohacking longevity experiment that we have playing out.
Amazing. Appreciate you
Thanks,
guys
Benji.
so much. No, thanks for having me. We'll talk
See
to you
you, buddy.
We'll see you next time, man.
Peace, homies.
Cheers.
All right.
Cheers.
All righty, Rob. That was a fun conversation. Started off all over with the
I mean, just the newest developments in media and the
stuff,
shift,
the brands and the trust, and then into DeSci, which they're weirdly connected.
They are. I mean, you could actually extend that even more because you have the distrust in universities, which are typically the ones that are collecting the grant funding. But you actually have most of the time the university is taking a cut out of those grants. And that's why the Trump administration cut a lot of that funding is because they were Trump was effectively at war with Harvard over the whole DEI stuff and the whole Ivy League schools.
I know.
And cut a lot of their funding. And the argument was like, look, like this should be going to the scientists directly anyway. And so now coming full circle, it is.
Yeah, I think I hope Benji didn't feel bad. Like I was like giggling at him or something. It's just, it's funny. Like the DeSci is just so early, and it's funny when you start talking about science in the realm, which is like such an academic thing, right? Such a strong academic thing. Like Rob, you have a math degree, bro. Like that is a thing, right? And then you just throw in like, we have the same mechanics on our bonding curves for like AMM fees. And I'm just like, it's such a dichotomy. It's hilarious.
Yeah, because there is a very stark contrast. Also, I think it was Peter Thiel who said something about like the word science. Like if you have something that isn't science and you just put it behind science, it cancels the entire thing out. Like political science, that's just politics. Or like social science.
That is
it's
funny.
just like the humanities. Like just putting science behind it is a key word to say like this isn't actually science.
Well, look, Paul and Bio got a great round close yesterday from Arthur. Arthur's knows what he's doing. 𝘗𝘓𝑚 knows what they're doing. They're definitely obviously very just investor kind of oriented, make money, build a strong fund, have a strong outlook. So they're obviously bullish. So something is happening that people should pay attention to on both what Benji's doing with Pump Science and what with Paul's doing at Bio. I don't have any exposure here, guys, but I love learning and love having them on. And I think, Rob, we're ready for our next and final guest, the first episode of the AI Supercycle with 𝘗𝘂𝘓𝘂. I just got a text from Mads from Maven asking me what this haircut is. And then I got my other buddy Reed saying I look like Miami Vice. So that's about where we're at today.
You're going with the slick back look. Next thing we know, you're going to have a button-down shirt, then you're going to have a jacket on. And then
dude, it's just I'm too lazy to get a haircut.
We're going to have a makeup girl like putting like stuff on your face before we go 3, 2, and she's like running off the picture.
Oh my goodness, dude. All righty, guys. I think we're ready for 𝘗𝘂𝘓𝘂. He's coming up. And yeah, I mean, I think that is the main, the main first show for
We're
this.
excited.
Yeah.
Let's make sure that we have everything teed up. I think 𝘗𝘂𝘓𝘂 is one of the key people in this sector.
Well, yeah, I mean, he's one of the earliest in AI people in crypto, like actually in AI.
And I think it's important to mention that 𝘗𝘂𝘓𝘂 started out as an AI company, and I didn't know that.
Yes.
When I first learned about 𝘗𝘂𝘓𝘂, I just saw their L1 and I said, oh, it's another alt L1.
Yes.
So they actually built out an L1 to solve the machine-to-machine economy problem that they had.
Yes.
They needed some sort of way to process micropayments
Yes.
for labeling data and incentivizing intelligence in an AI network. And so when they kind of hit that roadblock on their path of being an AI company, that's when they switched and they said, hey, we have to build this out in order to fulfill the vision. They built out the blockchain. Now they have the blockchain. They still have a lot of the existing AI infrastructure. And so now they're able to put these pieces together. They're kind of revisiting the original vision of the AI super intelligent network that they're building out now. So,
well, look, I'm stoked to be partnered with 𝘗𝘳. I think they're one of the best companies for probably the best crypto AI company. Like everyone else is honestly so early, full of you know what, and just doesn't really have the breadth and depth that I think 𝘗𝘳 does in terms of actual people, headcount, work being done, and then actual depth in terms of 𝘗𝘬 and his background. So we're stoked to bring the show to you guys.
We're on the path to 𝘗𝘳𝘦 Huang. So 𝘗𝘳's going to kick us off today. This is the first episode, and that's just an idea. That's just an idea of where we're going to get you guys fired up, because we're fired up for this show, and we're excited to show you.
All right, let's bring 𝘗𝘬 up, guys. We'll do the first episode of AI Supercycle. Enjoy. Let's go. Here we go. All right, welcome to episode 1 of AI Supercycle presented by 𝘗𝘳. Today we have the 𝘗𝘳 CEO, co-founder 𝘗𝘬𝘃𝗏 to talk about the 𝘗𝘳 vision for AI and really just uncover and unveil this next generation forward-thinking model of AI. 𝘗𝘬, it's great to have you on. It's not your first time, but it is your first time on this new show. So welcome on, man.
Thank you for having me. Excited for this show overall and excited to dive in.
I think we're pretty excited about user-owned AI and some of the things that you have cooking over at 𝘗𝘳. And so, we called this show the AI Supercycle. I guess let's just get warmed up here. Are we in an AI Supercycle, 𝘗𝘬?
I mean, I call it AI last cycle because I think everything from now on is going to be done by AI. But I mean, for sure, if we think of kind of broad technologies that have reshaped the world, electricity, cars, internet, AI by its magnitude is probably going to be bigger than those. And so it obviously builds on them, but I think kind of bringing intelligence and kind of allowing to program it, to define how it's done, to also leverage it ourselves. I think it will reshape the world in massive, massive ways.
And I think just the spending right now in terms of AI investment is certainly in a super cycle. I think you could argue it is propping up the entire stock market in the US currently.
For sure, yeah. I mean, I think we definitely see the infrastructure build out phase, right, which we've seen kind of before with internet. But at the same, I mean, and there is discussions, this is a bubble or not a bubble, but at the end, I think the opportunity that it brings, similarly how, even though there was a lot of investment and potentially bubble that happened in, end of 90s in internet, right? We know now that internet was indeed massive, shift in how we do work, how we consume information, how the world operates. And so, kind of AI is doing the same, but I think on accelerated terms. And so that's why we kind of see, a lot more investment, a lot more kind of hardware being built out because it's very, very energy and kind of compute consuming.
Yeah.
I'm thinking about kind of the power laws at play here now. There's tons of investment. We saw, OpenAI and Oracle did this $300 billion deal recently. The joke is that neither Oracle has $300 billion to give, and OpenAI doesn't have $300 billion in compute to give. So maybe before we get into some of the nitty gritty around the technicals of what 𝘗𝘳 is building, when you see some of these massive partnership announcements, but underneath the surface, how are those deals done? What is really going on underneath the surface to allow them to make a deal like this?
Yeah, I think, I mean, to draw the line with crypto, right? You know, crypto thought they invented the partnership game where, you know, you partner and like both tokens pump. But, you know, we're definitely not the first at kind of these games. So traditionally, like in you know, in TradFi, there's a lot of deals which are done on leverage and on effectively loans, and especially when we're talking about this capex heavy work. So Stargate example, right? Stargate example was saying, hey, we're gonna have 500 billion of hardware built, right? 500 billion project of building hardware. Now the thing is, like, if you wanna purchase, for example, I mean, let's use small numbers, $100 million worth of compute, you don't actually need to pay out 100 million from your pocket. You can say, hey, I'm going to put in 20 million from my own pocket, and then I'll go in and borrow 80 more million, right, to buy 100 million worth of compute. And so this is very similar how you do with house, right? You have a 20% down payment, and then, you know, you pay out X amount every month for the mortgage. Except here, the compute actually makes money, right? So when you get 100 million worth of compute, you're actually making revenue from that, so you can pay back the loan while also taking some revenue. And so now you just did a 5x leverage effectively, because, you know, you effectively put in 20 million of your own money while leveraging up. Now, the people who are playing these games with, you know, 500 billion obviously are way better at this, and so their leverage is higher. They're, you know, when they announce 500 billion, they effectively split it, you know, as investment over 5 years. So this is already 100 billion a year. And then they also say, well, first year is not going to be 100 billion. We're going to only put 20 billion first year into the ground, right? And then scale up from there. And so the 20 billion, you only then need, you know, 5 billion of actually your money, maybe, or even 4. And so, like, it all kind of goes down to like the exact implementation of that becomes like a financial engineering problem. And obviously, like, there's really good people there designing this. And now, you know, if we're saying this year it's 4 or 5 billion, well, OpenAI is already making almost 20 billion in revenue this year, right? And so, like, now this is actually a manageable numbers, and given their growth has been such parabolic, and they project that growth as well, you know, they can expect that next year they'll be able to put in more. So, like, it's all kind of, I mean, I think the interesting thing about AI, and where kind of it interestingly overlaps with crypto, is that a lot of AI right now is financial engineering, right? It's all about, like, where to get compute, how to get the best best price for electricity, how to, you know, combine it. There's a lot of actual electrical engineering, obviously, and software engineering that comes in, but on the surface, like, these big numbers are all financial engineering. And where, again, crypto is potentially has, you know, a huge role to play, is because, you know, we have instruments to do this kind of things. Although I don't think right now crypto has actually the depth of, for example, you know, you can't go in and borrow 20 billion of capital on chain. But I think the opportunity is there to really kind of create new instruments and new assets for this kind of stuff.
Yeah, and I think that this deal really just signifies that OpenAI is going for, you know, to be one of the larger companies in the world. I mean, whether public or private, or, you know, eventually going from private to public, they're signaling, like, look, like, you know, this is something that we're basically, our product's going to be used by everyone worldwide, globally. Everyone's going to be subscriber. You know, we're going to, you know, reach that level of Google, Apple kind of, you know, esque type of capability, which is just extremely promising for the entire AI space as a whole. But I think now is a really good time to kind of segue into some of the things that you guys feel from the near perspective is extremely pressing in today's time. So, you know, you being one of the co-creators of the transformer model, have, you know, outwardly suggested many times on our show and other shows that the current centralized AI systems are unsustainable and, frankly, fundamentally broken. You know, you've been a big advocate for user-owned AI, which emphasizes the need for privacy and confidentiality. I think in, you know, prompting and data sourcing, in the training of different LLMs. And basically what we're trying to do here is unlock the full potential of AI in a personal and a professional context. And so, broadly, when you're looking at this vision, Ilya, we're trying to prevent a future where a single AI can control information. We're trying to create a more peer-to-peer network in the state of, Byzantine fault-tolerant networks like blockchains, but for AI systems. And basically, we're trying to create individual AI agents that can interact directly and autonomously in the system. So there's a lot to kind of overview here, but I would like to just hear it from you as the first episode of this show, to really set the through line for the message that we are going to carry on your behalf as we go and grow this show. Kind of what is this core message that you have to the AI community, to the world, frankly, for how you would like to see the development of these systems go for the better of humanity?
Yeah, I think it's a good segue from saying, hey, we expect AI, and OpenAI is trying to play this role to be this kind of general available technology that everybody in the world uses, right? Again, to draw the parallel with internet, right? 5 billion people are right now connected to internet. That's how they consume information. That's how they connect to each other. That's how they, shop, and kind of entertain themselves and work. And so as AI becomes that as well, it's extremely important that we don't end up in AOL world, right? Where, imagine AOL was the only company that provided internet globally to everyone. And, you want to host a website, you need to go to AOL. You want to search for something, AOL is effectively only option to, see the results, right? That's a very, scary and kind of dystopian world. And, very kind of luckily we haven't ended up in that, right? And kind of the openness of the internet was preserved. And so similarly with kind of how do we ensure this happens with AI? And again, I actually believe AI is a more world-changing technology than internet even is, because internet is still kind of allows us to go and, see the information and kind of decide if we like it or not, if we believe it or not, etc. With AI, what's going to happen and kind of, looking into the future, the AI will effectively be our lens into the world, right? Be that very explicitly, right, where you were wearing the glasses and, there's an AR on top, or implicitly where, as you read in the news, it's all generated by AI, as, then like the messages, kind of all the content, all the consumption, all the decisions that you make, right, they're going to be either done by AI or augmented by AI. And so whoever controls that AI, whichever kind of decisions, and biases were introduced in that AI system, will decide on how people are actually perceive the reality, right? And so I think that's a very kind of scary situation if that is effectively controlled by one company. However good or bad that company is, it's just like that company always will have a singular bias. And so that's where kind of the idea of user-owned AI is not actually like open source or closed source. It's really about AI being yours, not theirs, right? Like how do we make sure that everyone has, right to AI in a way, and make sure that everyone has control and kind of sovereignty over their AI, and kind of avoid the collapse into effectively 1984, where you have a big brother watching you at all times and really feeding you what you should see and what you should do. So that's kind of the fundamental. And I think it's very much born out of kind of crypto values as well. But it's way bigger than, kind of crypto have been trying to do, especially in the past couple of years, right? Where it's been like, hey, this is a new financial system, to really like, hey, this is a new like internet, right? Kind of back to those discussions we've had, in 17, 18, 19, when we were like, hey, we actually want to rebuild internet in a new way. And I think now it's pretty clear that AI is rebuilding internet, right? And going to change how we interact with internet. And we need to make sure that it's built on a kind of the right ways. And so where this kind of goes to blockchain is, I think, you can't expect to try, like, let's imagine somebody right now says like, hey, we'll do, your AI, but we'll do it as a for-profit company. I think the challenge here is that you're going to end up in a very similar situation as like the existing companies have ended up, because it is very resource intensive. It requires massive amount of capital and financial engineering to really scale it and bring it to the world. And you need to raise capital to do that. You need to effectively do all of those actions. And so if you are doing it in kind of traditional for-profit way, you will end up kind of still owning the control and governance of the system. And so that's where we need a decentralized, right, at the fundamental level system where you can both raise capital in a decentralized way and kind of distribute value to the users themselves. You can have people participating. You can have people kind of forking and, making their own routes where they need to really kind of create this ecosystem that is building user-owned AI.
I think you make a really important point about AI taking the place of the internet as the lens in which we see the world. Because you can say that for a long time, Google would be kind of your gateway. You would search, and then that would kind of open up the encyclopedia of knowledge that takes place on the internet. Now you could argue it's social media. AI is replacing search. Also, social media companies are integrating AI deeper and deeper into their systems. Meta, obviously, with Instagram. Twitter has Grok. Each of these systems are now integrating AI. And so I think we all have this sneaking intuition that blockchain is a solution for some of the problems that it could introduce. But could you just go a little bit deeper into why it's a problem that these are the companies and the centralized nature of these systems are the ones that are pushing AI? Like, why is it such a problem that each of these companies has biases and they're implementing it? Why could that turn out so dystopian?
Yeah, so maybe it's worth starting with, like, AI is not a new thing, right? Obviously, we have LLMs and generative AI kind of popularized by ChatGPT. But the thing is, Google has been doing AI since effectively founding, right? Larry and Sergey were AI PhDs, and the PageRank is the AI algorithm of 90s. Similarly, the feed that Facebook built, right, has been using kind of machine learning AI principles. So the reality is, like, we're already seeing internet through AI lens for decades now. And we know all the challenges that brought, right? Like, we have constant, battles around, have this been censored or the content being shown in like right ways. There is like pressure. There was pressure on social media to remove some content or censor some people, and then there's another pressure, which is when they don't censor, like, is this the right approach or not? So we already have all those kind of issues, like for the companies that have billion user scale. And AI is just gonna exacerbate that, right? I mean, actually past couple of weeks been interesting as a confirmation for this, right? We've had, Anthropic and others just change their policy to start training on your data. We have ChatGPT effectively saying, hey, we actually running analysis on all your chats and sending them to humans to look at it and sending them to police if there's something flagged. Right. So
what
we have obviously Sam saying that nothing you say to ChatGPT is privileged in any way. Right. I mean, they're already sending it to police, but also like this can be subpoenaed at any time. And so like we don't even need to go into like, hey, there's a malicious act of, one of these companies. Like I'm not even talking about that. I'm talking about like very practical things where as these companies become big, they effectively succumb under the whatever like political and kind of societal pressures are. And there's no right answer. We know that. Like that's why blockchain is such a, again, the neutrality is really important, right? Because you cannot be kind of susceptible to any of these pressures, because as soon as you give up one, you start giving up the other.
These are the same companies that succumbed to the censorship regime that was taking place during some of the elections in the United States, and there were several, controversies that ended up not really turning out to be controversies because these social media companies really did succumb to the censorship pressures that you're describing. And ultimately, we'll get to blockchains and why they're censorship resistant and how it helps. But yeah, please finish your thought.
Yeah, I mean, just to give you like a bunch more examples, right? So if we go to a more malicious approaches, well, there's this concept of sleeper agents. So you can actually train the model in such a way that it doesn't behave abnormally when you test it, benchmark it, or in normal ways, but it actually changes its behavior at a specific moment of time during specific conditions. So if we imagine how the next Stuxnet, if you're familiar, this hack that happened with like Iranian centrifuge happened, like the next Stuxnet will be just a sleeper agent inside the coding LLMs, where as somebody writes some code, like it would activate and effectively inject malicious code into the code base. And the thing is, like, if you don't know what is in the model, you will never know like that this happened. We have obviously like kind of unclear where to stop, right? On the, like, I mean, there's this complaints that Anthropic's quality of the model declines during daytime, right? So you don't know, again, which model you're using. You don't know what quality you're getting at this moment. So kind of, is this the the best model you have? Is this what you paid for, etc.? So like there's already a number of challenges even before we go into, but the really scary ones is, like, right now, if you go in and prompt, take one of these models and prompt it like, hey, suddenly change my opinion about this topic, right? And just put that into system prompt on your in your ChatGPT or whatever, and it will start doing this across all the chats you're doing, right? It's effectively in system prompt, and it's like, as you're talking about something else, it will keep changing your opinion. And so, like, this is totally, like, you don't even know if this is happening, right? This can be in the current system prompt right now. Like, everybody should like whatever CEO of whatever company, right? So it's really, like, again, important that we know what goes in, because otherwise we effectively giving up the control of the information we are consuming. And again, we already see from the, empirically, people are trusting more and more this AI systems, especially around things like, like talking to them as therapists, making decisions, etc. And I think actually that's going to accelerate, because I do think AI will become our kind of delegate of decisions in the world. And, be that political decisions, right? Who to vote for, what to purchase, etc. Which car to buy, etc. Like, all of those things will, we'll be using AI to kind of make decisions. And we have if we don't know what goes in, we don't know what, what's in the model, what's in the system prompt, you have no idea kind of how you've been impacted by any kind of biases. And so, yeah.
Are the system prompts for the major models and Anthropic, Claude, OpenAI, ChatGPT, like, are those currently available? Can we go find the system prompts for these?
So people have so there's a ways to, like, kind of trick the model to output it, but again, we don't know if this is the real system prompt or they told to output that. But also, even if it's not system prompt, you can just train the model. Like, effectively, whatever you go in system prompt, there's ways to, like, kind of pre-encode it into the weights as well. So, like, there's very hard to kind of extract back this kind of, if people really want to hide it, it will be really hard to extract that kind of bias. Like, you need to know the pipeline, what goes in.
Got it. Okay, so now I think this sets up really nicely for a credibly neutral, censorship resistant base layer that is totally verifiable, so that you can see the system prompt, you understand what goes in, and then you can understand if it's being tampered with. And so we can see not just the the original input system prompt, but we can also see all of the potential attack vectors and the ways in which we're injecting bias into the system. And this, at a theoretical level, is blockchain. But I'm curious more about Near's implementation of this. I think you were starting to get into why blockchains are important to solve some of these issues with bias and censorship and privacy and all these things. Maybe you can give a little bit more of a general, solution as to why blockchain is the answer, but more directly, why is near blockchain the answer for AI's problems?
Yeah, so I would say specifically blockchain is component of the answer, right? So you need like a whole system to really deliver a result here. And so what near combines, right? It's not just blockchain. It combines a set of technologies. Specifically, we have a technology called decentralized confidential machine learning. So this builds, using blockchain, a decentralized kind of network of accelerated hardware that runs in so-called secure enclave or trusted execution environment mode, where all the compute that happens there is confidential, private, and verifiable. And it's a very pragmatic choice because all the cryptographic primitives, right? People love ZK, people love fully homomorphic encryption. They're too slow, they're too expensive, and they're not practical for use in kind of AI workloads. And so we have this kind of pragmatic approach where you give up some of the sovereignty given the kind of the hardware manufacturers involved, but in turn get this verifiability and privacy for it's less than 5% overhead, usually 1% overhead to the normal compute cost. So that gives you effective ability to run AI agents as well, AI inference and AI agents in a verifiable and confidential way. So now you actually have a guarantee that this specific model was run on, and I'm as a user know that it was on my data. There's nothing else ran on my data, and this is the outcome. And nobody else will be able to get this data and this run. So that's a really important component. It uses blockchain for the marketplace itself, for compute, for the payments, for kind of coordination of this whole system, as well as key provisioning and management. There's another component which we call chain signatures, which is the near validators themselves run multi-party computation network to allow for data encryption, decryption, as well as kind of signatures for other transactions on other chains. So that allows to have actually end-to-end encryption for the data. For example, you can encrypt your private information, memory, connections to Gmail, etc., and it's only decryptable again inside the agent that runs on your behalf. And then that is also allows us to run autonomous agents and kind of other use cases. So it's really like a combination of technologies that working together to provide us with a solution. But indeed, solution is kind of, from a user perspective, offers you effectively a private AI that you can use, that you can trust to add a lot more context, right? Like one of the challenges, like I'm feeling very unsettled to try to connect my Gmail, for example, to OpenAI, right? Because my Gmail has a lot of websites and like access controls through it, etc. So like if something happens, like who knows, like you effectively can be compromised across a lot of places. Yeah. And so you really want like to know that this data is not going anywhere, that this really kind of stays private. And similarly in a work environment, the same thing, right? Like, you guys running the podcast, you definitely don't want all your data to like randomly go somewhere. And especially financial institutions, legal, healthcare, like there's a lot of industries for whom data is extremely sensitive. So this opens up an ability to really use all your data, all your context in the AI, while knowing that effectively it's as if it was running locally, right? But really getting the best of the best models, open weights models. Now, further than that, it allows us to start actually building, fine-tuning, and then building models in a new way where we actually know that this data was run, with this code, and this is the model we received. And so that's kind of the new thing we're introducing. We call it open source, but encrypted weights models, where what goes in, but the model weights themselves stay encrypted. And so because of this, you actually can monetize them. So you can have now a monetization loop that allows to fund research and development of this model, including compute, and in turn receive a model that can pay back, which means also you can now, do financial engineering, so you can actually have a token per model, right, which you can distribute, as an investment for people who contributed to it, and then the token will capture the revenue from this model going forward. So that actually allows us to bring, you know, this kind of verifiable understanding of what goes into the model. And because it's an open platform, you know, if you don't like what went into that model, you can go fork it, you know, train your own version with maybe different biases and use it. But at least now you have this choice, and you kind of have a monetization framework around it to also benefit the contributors and developers and compute providers.
Yeah. So I would say then, like, the core idea here is around the user data, the memory, the context, and models / inferencing being private and owned by the user. This is like the core idea that we must always get across.
Correct. Yes.
And then basically this, we can achieve this through Near's, you know, setup of effectively what I would consider like a decentralized, confidential, like cloud-like system where you know, you have GPUs and CPUs that run in these kind of secure, confidential vaults. And then you've got, you know, on top of that, you have things like chain signatures, and you've got the, you know, encrypted model weights that you just spoke on. And so effectively, we can create this end-to-end encrypted system where models can only be decrypted within these like confidential, you know, like scope of agreement, basically saying, okay, like we are going to allow the unencryption or the decryption, sorry, of these given model weights, but only in a secure environment. And basically what we get to at a point as a result of all this, should it work, should we be able to educate, you know, persuade and kind of empower people, we should end up getting a world where you feel comfortable connecting your Gmail and your YouTube and your Google Docs and your Google Drive and everything to your LLM, and that will give you a much better experience, much better result, but also maintaining the same levels of core privacy that, you know, that you would expect from any other kind of large tech company, or just in general, kind of like what you're doing on chain. And so the future could look like a better version of what we have today, because users are willing to provide more information, to be more open about their personal life, but also just connect other APIs, connect other services into one. And into this kind of fully private user-owned setup.
Exactly. Yeah. Like the idea is that you can actually get a better product because you are able to connect more context. And again, right now, I think the AI capabilities are, you know, really good. It's really now about context. And in turn, you know, going forward, it creates us a model where we can actually know what, you know, we get the organic, you know, farm to table model where we know what goes into this as well. Versus right now, you know, you have no idea what kind of GMO is in it.
Yeah, things are slammed full of antibiotics. putting microplastics in our AI. Ilya, I think, you know, people have, if you've been around the space and you know, you've probably seen Near, because you guys have been around a long time. You guys have survived multiple cycles, but you have built pieces of this technology as you've gone and progressed towards this vision. And so I can remember when, you know, Near was, you know, it was an L1 kinda, and then it was chain abstraction, and then now it's AI. And I think to someone who hasn't been paying attention, this might feel a little bit discontinuous. So I just want to give you a chance to explain the continuity behind this vision. And then ultimately, once we've kind of gotten, you know, up to speed, you know, where do we go from here with Near and how it is intertwined with AI? Could you just kind of like tell the story and catch people up, and then try to forecast out and tell what is coming up next for Near?
For sure. Yeah. I mean, the story, we started as AI startup, right, back in 2017. Effectively, after I worked on Transformers, I left Google because I wanted to put that into production and build a product. And the realization was it was too early. Like, we didn't have enough compute. So what we were trying to do was to get a lot more training data. And so we were coordinating a lot of computer science students around the world to get us this training data. And we were lacking a global payment network that we can use to actually pay them. right? Like into China, into Eastern Europe, into Southeast Asia. There's all kind of challenges paying in the fiat world. And especially when we were sending like 15 cents, 30 cents here and there, right? Neither Ethereum or Bitcoin were able to do that in 2018, right? The fees were higher even back then. And so Near protocol started as like, hey, how do we actually build a network that is able to kind of coordinate this kind of data contribution, data labeling type thing? But obviously, we went and talked with more developers and realized that like everybody has this problem, right? Not just for machine learning. And so kind of we ended up building this generic layer 1 because we wanted to make sure everyone can use it. And so interestingly, the data labeling platform actually launched in 2021, and it's been running ever since, called kind of Near Crowd. There's also a few other data platforms like Public AI that launched since then. But as part of this vision back then, we kind of realized like, the vision of AI, like Near AI originally, was kind of changing how you interact with computing. Because if your AI can write code, I mean, kind of what we discussed, right? The way you will interact, like you will not need apps, you will not need SaaS. You can just have AI build it on the fly. And then we bring the blockchain, we realize like, hey, actually, you can also change how the data is done and how the ownership is done. And so back in 2019, if you go back and actually listen to some of my talks, we're talking about, user-owned internet, right? And I would say like, hey, we need to replace Google and Facebook and build user-owned internet. And the problem there back then, it wasn't clear how to do that, right? Everybody's like, well, how are you going to build a decentralized Google? That was the question I would get. And I'm like, well, we need to build the foundational blockchain technology, and then we'll, build stuff on top. Now, with LLMs, now it's pretty clear how to build decentralized Google, right? I don't think anybody is actually asking this question anymore. Even, social media as well, like we have answers now. So that was always kind of like, hey, the transformation is going to happen, and it's going to happen kind of across the whole stack. And you need blockchain as a way to, around a kind of root of trust, coordination, micropayments, etc. Now, with chain abstraction, again, the part of the realization was like, well, as we're building this, it was actually clear that, there's not going to be a single chain that wins everything, right? There are going to be applications everywhere. There are going to be kind of smart contracts and value everywhere. And so you want to unite it. And again, AI will be the interface, but you want a way to really give AI like a way to navigate the whole Web3. And so chain abstraction kind of, for example, chain signatures were built to navigate the Web3. It's also used for encryption and decryption of the data for the AI, right? So it kind of serves multiple purposes. I had this discussion as 𝗵𝗵𝗧𝗏 actually, like, he's like, hey, wouldn't AI just go and like have accounts on every chain? And my answer is like, it can, but then you're losing all of the kind of controls and kind of systems that you can attach. And so if your AI is already running on Near in verifiable way, well, your Near account now is kind of the control plane, right? Where you can say, hey, you cannot do this types of action. You cannot kind of escape this. You have Near intents that allow to execute actions across all of these chains. And you have kind of Near chain signatures to really kind of control the assets and value across all of these different platforms. So it's really like kind of composes all together into one stack. Now, going forward, I mean, we're definitely continue, building out this DCML, kind of this private, confidential, and verifiable cloud. Part of, use cases you can use it for is to run, for example, autonomous agents, right? Where you run, instead of smart contract, you run the AI agent in this kind of confidential, verifiable way. It, can run on any of the nodes available on the network. So you cannot shut it down. You can give it a mission. It may or may not have token holders, and now it can go and do things. And again, intents serve as effectively a way to execute actions in the world, right? Be that, on chain or off chain. So kind of the way I assume, like, and we're kind of building toward the vision is every individual has their AI that is really their interface to the world, right? Their lens to the world. It is able to go and execute actions both on chain and off chain using intents type architecture. right? So everything from, give me some Bitcoin to go and, buy some pizza, or, I want to build a, house for my kid. And then on the other side, so this is like individuals, and they kind of using the intents between each other, as well as with other autonomous agents, right, that are running in this. They have a mission, they maybe have kind of shareholders. And so that all together, this whole system effectively is this like super intelligent system where you kind of have lots of this AIs together, maybe solving problems together as well. And so that's kind of the vision we're building toward, kind of lots of infrastructure, privacy, user ownership, but also kind of how all of this forms, a super intelligent swarm as well. But all of this, we continue learning and iterating, right? Because like, as you mentioned, right, we kind of focused on different angles of this vision at a time, because you can't like, ship everything at a time. But as the ecosystem expands, we actually have different teams going in all those directions now in parallel. And so there's definitely still teams on Near that are building a ton of innovative, DeFi primitives that are multi-chain. There's teams doing AI that kind of leveraging this. So kind of the way we think of this is like, this is going to be a multifaceted ecosystem that together forms this kind of really innovative way you're going to interact with new internet.
And Ilya, I think that you can tease maybe a little bit as to one of the upcoming products that will launch this month or early next month for Near AI, or at least kind of maybe give us a little bit of a hint.
Yeah, I mean, so there is a fully private end-to-end encrypted chat, so that should replace your ChatGPT and let you kind of day-to-day switch to the product. So we've been kind of testing it with a few of the close partners, and yeah, pretty excited for this coming to market, because this is kind of first version of really like all of those pieces working together and showcasing how to do this. It also serves as developer platform, because like as a everything you as a user, you use it. If you can't go and log in later in other applications with the same account, those applications on your permission can access your context as well. So this means that new applications can sprung up, kind of leveraging this and kind of keep expanding the network. So I think there's a lot of exciting stuff coming up, and yeah, I'm looking forward.
And that'll operate in that same like encrypted and then decrypted, but based on user preference, but within a controlled environment kind of set up, correct?
Correct, yeah.
Beautiful. Ilya 𝗬𝘳𝘠𝗦𝘧𝘐, episode 1, AI Supercycle, one of the co-creators of Transformers at Google, now with Near AI. This is like the beginning of a parabolic S-curve rise on this show, Ilya. We appreciate you being the first guest on a Sunday, and for helping us to put this all together. Robbie and I are on the road to Jensen Huang on this show, and we're not stopping until we get there. So appreciate your time, and looking forward to seeing this new chat product come out, speaking to you again in a couple of months, as well as just co-hosting some of these together if we get a really awesome guest that you want to be a part of, that you think can be a part of the Near ecosystem. So Ilya, appreciate your time, man.
Sounds good. Appreciate you guys doing this, and excited for what's coming.
Same here. Thanks, Ilya.